All right, welcome everybody. Going to get started here momentarily. Sit down, tune in, turn on. Just making sure that you hear me all right. We are going to start here in just a few seconds. Please chat in where you might be joining us from. I'm always kind of curious on that particular front. Getting everything set up here on my side. So welcome everybody. We are again just making sure you're good to go. Yeah, getting issues filled on them? Not at all. Depends on what you're looking at over there. Sorry, I'm answering a couple of questions coming in over here. So welcome. My name is Don Kaufman. We're ready to get going. Let's let us begin here. So again, welcome everybody. My name is Don Kaufman. I'll be joining me here for about the next 90 minutes or so. So sit down, get comfortable. Again, as I said, feel free and please do chat in. Let us know that you hear us all right. I'll wait a few moments for a few people to chat in. If you're up for it, let us know where you're joining us from. Just city, kind of curious. Got people usually joining from all over the world typically. So all right. I know markets are moving a little bit today, making sure everybody's good. Cool. Wow, people actually live in Cupertino, huh? I thought just Tim Cook, man. That's it. All right. Cool. I think we have a winner here. Winner, chicken dinner. Hong Kong is the furthest away at this point. So all right. Spent some time there. Okay. It's good stuff. Cool. All right. So today I'll be actually joining you from, I'm in Paradise Valley. It's just outside Scottsdale, Arizona. I live in the U.S. Virgin Islands, but I'm back here now for a few months. Go back and forth. Kids go to school here in Arizona most of the time. So I am back in the U.S., capable of getting Costco chickens. It's good stuff. So you guys are watching today, Ultimate Alert. Again, my name is Don Kaufman. You're watching a TheoTRADE presentation. So we are obviously here on Friday. There's been a lot of movement in markets. This is a wonderful discussion to have specifically for today, because first of all, there's a tremendous amount going on in markets. I think you guys will grab a lot out of this. Actually, today I'm rather pleased, if you will, that markets are opened. There'll be quite a bit. And by the way, if you see me looking around, I've got monitors all around me. So even when I'm on the presentation, I only have one screen dedicated to a slide that's on there. But from time to time, you're going to see me deviate, look towards the S&Ps, obviously to positions that I presently have on. Look, before I even give you any introduction whatsoever, one of the most important things that I can instill upon you, everything, and I mean everything that we do here at TheoTRADE is completely no holds barred, meaning you get to see everything. And I'm going to show you just that throughout the course of today. Every balance, every trade that I do. I have no problem showing you multiple trading applications, all the different accounts that we're executing in, every P&L. It's no holds barred approach. And it's one of the most important things. You'll hear me say that a couple of times probably today, because I always feel like nobody ever wants to bring up their live account. Are they really making money? Look, anybody can show some cut and paste, a couple of profitable trades. Very few, though, will actually come up here and show you stuff like net lick. That's my net lick on the week. That's just this one account. So, and then again, it's, these are portfolio margin accounts, but this is the aggregate net lick just in, if you have no idea what net lick means, net liquidating value. One of the most important things as a trader, you want to see a positive, obviously, net liquidating value. So I started the week here at 524. If that's 524,000, that's just this, what I have over here in thinkorswim. Here we are at the end of the week at about 550,000. And again, that's some of the accounts, and net with a few $1 million that we're moving around. Some other accounts in here that are doing nicely at this point. This kind of volatility is helpful. So again, I am really critical about. By the way, when you show profit and loss, I can't show it from the monitor, Tim. I'd have to come over to the account statement, which I can do throughout the course of this. One of the most important things is that you do get a feel that, again, everything is kind of no holds barred here. So with that, as I jump into it, ultimate alert, high probability income generator. Again, my name is Don Kaufman, and you are watching TheoTRADE presentation. It's a risk disclosure. We're not financial advisors nor broker dealers. However, most of us do come from a background market making, the brokerage side of the business. Some of us were registered investment advisors. We've held basically every license imaginable. That's over. We are no longer financial advisors or a broker dealer. All right, a few housekeeping items. I like to get this out of the way right up front. Look, excuse me. I am going to go through a tremendous amount in the next 90 minutes, and it will be about 90 minutes. And I like to set the stage. And I'll stay here as long as I have to make sure that everybody is comfortable with what we have discussed today. If you see me looking away over here, sorry, I'm adjusting the temperature in here. It's still warm here in Arizona. Okay, it's very warm. Anyway, one of the most important things is that you got to understand, I'm going to go through a huge amount. This is a skill set. I say, pay attention, shut the door, turn off Skype, chat, whatever else is distracting you. One of the downsides of doing this presentation while the markets are open, it's much more dynamic, but at the same time, you might get a little bit distracted. And I'm aware of that. So that's why I put on close Facebook, get rid of Facebook forever. Put your phones on silent mode, definitely kick out the kids, the grandkids, the dog can stay, but you took the time to be here, focus on being here. Because I'm going to show you how to make returns like IWM 62% and QQQ 49% and spiders 50%. I'll show you exactly these trades. Literally, I will show you these trades. Continuing over here, our gift to you. Stay with me right until the end of today's webcast. We will provide you a copy of our expected move indicator. For those of you that have never been to a TheoTRADE presentation, expected move, it's critical, okay? There are so many different uses for this one particular tool. It's a $500 value. We will give you a link so that you can go download your own copy of this particular indicator. It's an indicator that has changed the way that we look at markets. Now, this is a screenshot and it talks about expected move. Forget that. I'm serious about it. Forget the screenshot. Look, markets are open. Let's go live. Let's go look at products like Tesla. Okay, look at something like Tesla with auto expected moves. What auto expected moves does is it uses the option marketplace to handicap forward risk. And it's such a slick tool because it's literally saying, and you know what, I love this, the SPX this week. I'm going to show you the SPX. And the reason I'm showing you the SPX, look where we are right now in the SPX. We're out here, okay? We were supposed to move about $60 this week. At one point, we doubled it. And the number of aspects that you can do with that. So obviously it's volatility expansion, but there was something I was talking about this last week, like don't sell options premium in the short duration, you're going to get killed. And the expected move, handicap that just spot on, people. Without the expected move, we never would have been able to see what that risk looked like. Again, I could just go into dozens of different things. The other aspect about expected move is it allowed me yesterday to get on all kinds of spectacular trades. So again, as I said, stay with me right until the end of the webcast. We'll give you a copy of the expected move indicator and auto expected move. Help me find winning trades like in spiders 60%, another one in spiders 50%, QQQ 64%, QQQ 52%. It's again, phenomenal out there in terms of what you can do. A couple more winning trades, QQQ. By the way, if you look at my trades, spiders, QQQ, another QQQ, 50%, QQQ, 51%, TLT, 53%, spiders, 50%. I am rather boring to what I trade, but I'm also, very real in terms of, do you really care what you trade as long as you're making money? I don't ask that facetiously. Do you really care what you trade? You want to trade stuff that wants to make, where you can make money. Who cares other than that? So the product, and when I say product, I mean something like spiders or QQQ. Product just basically means, what am I trading? What am I trading? So this is why you're here today. We're going to discover why Ultima trades. And I'll clarify something right off the bat. Ultima doesn't mean ultimate. Ultima is literally how these trades are making money. I'll explain precisely what Ultima is, okay, as we move on here. I mean, in context, what Ultima, okay, amounts to, I'll give you the, a little bit of a definition of it. Ultima is the volatility, okay? It's actually what we term a tertiary Greek, and it's actually how we're making money right now. I'll explain why it's so critical for today's environment and how to potentially generate income from it. We're going to look at a symbol that professionals use to create Ultima trades. We're going to learn how and where you can find edge as a retail trader. Edge is a really big deal for today's presentation. Do you guys ever think about that? What's your edge? What's your edge? You go, what does that mean? Okay, you want to be right, you want to be wrong. That's not what it means. Okay, we're going to talk about edge. We're going to learn how to reap the benefits of high probability trades. And more importantly, okay, how not to take large losses when we're wrong. And obviously, we're going to find what products makes the most viable candidates and what products are a recipe for disaster. And that's when I was talking about spiders and QQQ. Okay, what you trade defines you in this business. You want to trade garbage that's illiquid. That's fine. That's up to you. But we trade the most liquid products out there. Why? Okay, because that's what fills at good prices. I mean, that's trade execution. And that is, hey, it sounds really good on paper, but can you actually execute upon your, your trades? And that's exactly what we're going to do today. So there's one other aspect I really want to cover this, and I think it's so important. What you do not need, okay? You do not need a large trading account. Everything that I'm going to show you specifically today can be done with as little as $2,000 in the account. Okay, this is extremely hands-off. You do not have to have a tremendous amount of time. Okay, furthermore, everything that you can do here today can be done off of your phone. All executions, everything can be done off of your phone now. It's not even a matter of like, do I have to sit in front of a screen all day? Absolutely not. Trading experience, we can have you running in a few hours. I mean, it's again, it is a couple of hours because you just have to understand, okay, some of the vernacular of the trades. It's not like anybody has to learn, this entirely new skill set. It's vernacular. When I say like, you're selling a 3,500, MES put, you got to know what that basically breaks down to. And you're like, what's the MES? Exactly. Okay. You don't need a lot of margin here. You can do these trades with as little as $600 a margin. That's critical. Okay. Technical knowledge. You're not going to have to be a tech geek, and that's not technical analysis. I'm talking actual like computer knowledge. Again, execute off your phone. We have a supportive community. You don't necessarily have to be isolated. Okay. There's no hidden fees, high commissions. Trading has become so efficient these days, which is great. And you can be extremely small and be very efficient, and you're not going to have a lot of risk. We are extraordinarily risk averse. And I wanted to bring that to the table right up front. Here, a little bit about me. So if you guys are just tuning in, I see a lot of people, excuse me, a lot of people just joining here in the last 4 or 5 minutes, right? So if you're, if you are popping in here in the last 4 or 5 minutes, again, just briefly about myself. As I said, my name is Don Kaufman. If you ever need to get a hold of me after today, just go right here. We use a common inbox, support@TheoTRADE.com. Just put Don Kaufman in the subject, it goes right to me. And we take answering emails very, very seriously here. Most emails are answered same day. Here's a little bit about me. So if you have no idea, anybody here brand new? Let's start with that. Anybody here brand new have no idea what a TheoTRADE or a Don Kaufman happen to be? Anyone at all? Come on, people. Admitting it is the first step. By the way, the webinar chat over here, I watch it in real time. Somebody always asks like, is this recorded? Is this live? It's live. How do you know it's live? Because this is a live market, right? That's a live market in there. So awesome. This is only a few people came in and I'm new. So everybody knows everything already, right? Okay. I doubt that. So look, a little bit about me. I grew up around trading. People always have stories of how they got involved in trading. I'm sorry, I don't have a story. My background, okay. I grew up around trading. I had family that were in the market making side of the business in Chicago, going all the way back to the 1970s. So I grew up around this. I have no idea when I learned about options. Okay, I really don't. I started trading in Chicago in the late 90s. Shortly thereafter, I went to work for a no-name firm. That no-name firm turned out to be something called thinkorswim. I was very, very early on thinkorswim. I was like number 13 on there. I was on the executive staff and we actually took the company public in 2007. I was there when we were acquired in 2009 by TD Ameritrade. Yes, it was almost a $700 million deal. By the way, that's back when $700 million used to mean something, right? These days you have to be a billion, right? But $700 million is what the firm was just rounding up, though, was acquired for. I went on to run education for thinkorswim. I then signed a 5-year lockup clause with TD Ameritrade from 2010 to 2015. I ran education for none other than TD Ameritrade, and at the time was about 7 million clients. And a huge amount of what you're going to learn here today comes specifically from literally watching order flow of those accounts. And I can't stress this enough. Look, for those of you that have no idea what order flow is, here's the bottom line. We, and I say we because it's just not just myself, but our team, okay, inside of thinkorswim and TD Ameritrade, for the better part of 15 years that I was there, we got to see everything that you did, everything, and we studied it to no end. You know, people, they often ask, like, how did you guys build such a spectacular platform? We started building this back in like 2000, 2001, and I was there contracting with them even in 2001. Okay, a huge amount of the technology that comes from thinkorswim was from us actually studying you. Okay, we know exactly what works, what doesn't. And I say we again, a huge amount of the TheoTRADE staff here. Okay, where do you think we're from? So I ran the education group. Brandon Chapman was there. Okay, we've got Todd Sweet. He's actually on in terms of support. We have Blake Young here. We have Jeff Bierman. Jeff Bierman works with us here at TheoTRADE. He basically built most of the charting platform of thinkorswim. So if you've ever liked the charts on here, obviously this platform is now owned by Charles Schwab. And most of us, what did we do? Okay, flee the coop. All right, and we actually built TheoTRADE starting in about 2015. We launched TheoTRADE in 2016, and that's how we actually came about. But what you're going to learn here today literally comes from watching billions, okay, in other people's mistakes and the knowledge of what works best for retail traders. So this is in studio. It's the last time I was in Chicago. It's crazy. I haven't been to Chicago now 4 years. It's the longest time I haven't been to Chicago in my entire life. But I still do presentations pretty consistently on TD Ameritrade TV. I will pick up the occasional CNBC spot. This is probably one of the most memorable. It's myself pitted against, of course, Kevin O'Leary. This is Investors Business Daily, just a couple of media hits. The Investors Business Daily one is actually really cool. And it's really cool because this was at the end of last year, And the reason I always bring it up is this was 2022 was a rough year for most people. It was it's actually the best year we had since the financial crisis. And that quote took the cover of Investors Business Daily at the end of 2022. Again, it was December 19th, 2022. It was one of the best trading years we've had since the financial crisis. Here's a sample of some of the trades. Again, that IBD used to name us Trader of the Year. bonds 54%, ES 53%, ES 55%, bonds 64%, ES 51%. And again, I will show these exact trades and many more like it. I'll show you a portfolio, 18 months of returns here momentarily. People are kind of curious. 2022 portfolio returns in a $50,000 account. So it's 56.6. That was, again, to be fair, that was in 2022, and that was some rockin' volatility. 56% on 50 grand. The exact number is $28,314.75. All right, let's get down to business over here. Okay, market chaos. We're in it. We're in it right now. Some of the chaos that we're in right now inside of the marketplace, and I like to use the term chaos, and I got to tell you why. I just don't think that the word volatility does these markets justice anymore. Too many people look at something called VIX. VIX is S&P 500 volatility index. And the VIX, I mean, it jumped this week. There's no question volatility jumped this week. I like to call it chaos because there's just nothing clear to the future. You know, you think about some of the risks that are out there in the next like 2 weeks. There's a government shutdown. Is inflation cooling? Question mark. The Fed, well, we just got through the Fed. Are they pushing rates higher? They're contracting the balance sheet. You know, it's funny. Okay, everybody forgot about this. They haven't even talked about contracting the balance sheet, but now we're higher for longer, higher rates for longer. There's an incredibly strong dollar. If you guys have missed that, if you want something that's wildly inflationary, this is what I'm talking about with chaos. People, okay, that right there is one of the most wild things that I've ever seen. I mean, I've been in this industry since, late 90s, around it my whole life. That's one of the most wild things. Nobody saw the dollar coming back that strong. It's insane. Okay, geopolitical risks continue to proliferate. There's likely a government shutdown. There's strikes. It's just constant chaos. Embrace it. It's just game on. This is what we look for. Okay, markets got real in 2022. Stock picking and Reddit boards. Look, in 2021, you could have joined a Reddit board and they're like, "Oh, throw a dart." Okay, there were monkeys throwing darts and people were making money. Well, markets got real. Look, okay. We're not here, okay, to try to, predict anything. Prediction of anything right now is absolutely, okay, it's archaic to think that. And I don't mind saying that. I hope some of you are not, terribly offended, but does everybody kind of agree with that statement? I mean, look, some of the technicals are really effective and you can look at Fibonacci's and so forth, but you can't see 5 minutes in front of you, okay? You just have blinders on. You're going to need something, okay, that embraces that chaos, that embraces the volatility. You're going to need something that does not rely on directional bias. If you rely on directional bias right now, where are you going to end up? Okay, and reduces risk while substantiating monthly returns. I stress this so much because if you're reliant on what you think markets are going to do, okay, seriously, just why for yes and for no. How many people here think they're going to be able to really handicap the next couple of months in the marketplace? Seriously, do you really believe that? And I'm just curious, why for yes and for no? And I am trying to be a little contentious with this because I'm curious what people think. And that's for my own, consumption, nothing to do with this. Look, we're going to do what we're going to do. But I find it interesting because, like, what do you mean? Look, ultimate trades are not, they're not about, okay, what you think. It's about higher implied volatility. There's higher skew. And by the way, skew, okay, if you've never looked at skew before, skew is still up to like that 135 level. It's heavy. And again, some people have no clue. They've never even heard of skew. It's actually the symbol SKEW. S is in Sam, K is in kick, E is in echo, W. TheoTRADE looks at skew very, very consistently. And I'm going to look over 5 years because I want to show you, okay, skew, okay, it's up there. It is up there. And skew has just been a rockin' lately. So that skew is one of the degrees of profitability that we can get, edge on, which I'm going to discuss here. And all of this amounts to significantly higher options premium. Now, I mentioned the O word, options premium. Some people have never traded an option and then they panic the second that I actually say that. Okay, some people maybe have, and it's okay. Look, we are going to discuss options. Options are the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. Okay, options can help mitigate risk. Right now, we found edges in trading, which is Ultima, that are designed to sell options premium at the same time as reducing risk. And I'll stress to you time and again, okay, even if you're like vehemently against the idea of trading options, you want to listen to this presentation. Okay, you will get so much out of it, an understanding of where to find edge. We are going to talk about selling options, and you're going to learn to sell options. And a lot of people have kind of heard through the grapevine that selling options is the way to make money. How many people have heard that? Okay, that's Y for yes and for no. Okay, how many people have heard that selling, okay, options is the way to be able to make money? Because you always hear that stuff. Okay. Okay. And by the way, you don't need anything special over here. Somebody was asking, Joe was just asking, do you need this? Do you need that? Okay. You need a brokerage platform. And we're pretty adamant about, which brokerage platforms we work with. So I'll discuss that a little bit. So people hear about this. Okay. And maybe they're not familiar with it. Some people don't trade options. Okay. Which is fine. It's absolutely fine. Okay. The one thing I want to cover though, right off the bat, some of you have experimented with selling options. Okay. And if you have experimented with selling options, this is what happens to people that experiment with selling options. They sell an option, yay, they make money. They sell an option, yay, they make money. They sell an option, yay, they make money. They sell another option. Oh, did you get the license plate of the train that hit me? Okay. People make money, make money, make money, make money. Boom, get hit by a Mack truck, and they never saw it coming. They never see it coming. Selling options, okay, is good. It's very high probability, okay? But you're going to know that there's risk involved. We're going to show you how to do this effectively. We're going to show you how to do this and mitigate risk. In today's session, I'm going to separate myth from real risk, fact from fiction, all about selling options premium. And I stress to you right now, okay, unequivocally is one of the great times to sell premium. But I'm going to surprise some of you as to what premium we are selling. Okay. I am adamant about edge. If it doesn't have edge, we ain't trading it. When I say edge, you're going to learn what that is here. Now, for some of you that have no experience whatsoever, don't panic. You can do this. If you know nothing about options, that's okay for today's session. Listen, if you know nothing about options, that's okay for today's session. But time out. At the same time, some of you are rather experienced. And if you're experienced, okay, well, I'm going to gear this presentation for the absolute novice to the most extreme. How do you do that? Watch and learn. If you're brand new to this, look for big concepts. Brand new, big concepts, probability, risk. If you're experienced, you want to grab the little granular stuff, the nuances. Why am I selling options at a certain expiration? What's the delta that I'm using? Like there's little tiny granular things that I'm going to throw in here today. And one of the reasons I spend a good 90 minutes doing this is I'm going to go through a lot. Okay. The last thing I'm going to mention right here is a news flash. Selling premium. This is the second time I've said it. Can be done in accounts now even $2,000. Okay. $2,000. Now it's $5,000 in retirement accounts. You can sell option premium in a retirement account with $5,000, in a regular marginable account with $2,000. We'll show you how to do it. Okay. There's a lot of facets of selling premium. When we talk about the term selling premium just means selling options. But some of you have been around in options for a while. How many people here have been around options for a while? Anybody been around options for a while? Options. Who's been around options for a while? Okay, what's a while? I don't know, more than like a year. So the funny thing is, no matter how many times I've done this, and by the way, I've been trading most of my life, and I really have been. I started trading, I don't know, right out of college though. I was already trading in Chicago, but I've been around trading my entire life, and no matter how many years I've been in this business, you always hear like new names of new strategies and stuff. Look, there's one thing that I always want to like remind traders, okay, in this business, in options, okay, what do you have? You got calls, and you've got puts. And what can you do with calls and puts? You could be either a buyer or a seller. I remember that exact like looking kind of graph was one of the first things they taught me in this business. They're like, look, that's all you can do. But if you've been around options for a while, you can have credit spreads. There's bull call spreads and bear call spreads and bull put spreads and bear put spreads. There's strategies called iron condors. There's mambo combos. There's conversions. There's reversals. There's boxes. There's jelly rolls. There's delta neutral trading. There's selling naked. People, time out. In the end, it's all calls and puts. That's it. Options are nothing more than a call. Call, what's a call? It's the right to buy. What's a put? The right to sell. Don't even worry about puts. It's going to confuse people for today that are newer. So we're predominantly going to talk about calls. But in this business, you can be a buyer or a seller. That's all you got to worry about. You go, I did one of these, okay? And I put one of these on, which is a bull call spread in it. It was a bear call spread, okay? And then it looked like an iron condor. By the way, I'm making risk graphs, okay? I've been doing this long enough that, yeah, it's a straddle. But then I sold it. It's ridiculous. You have calls and you have puts. You can buy them or sell them. Don't make this any more difficult than it needs to be, right? By the way, how our members are doing. TheoTRADE, a place with a comprehensive set of resources to study and exceptional instructors, beginning with Don Kaufman. I have a PhD in quantitative economics. I learned more about the markets and the economy from listening to Don K when the Fed spoke than from many of my graduate studies. All the instructors offer unique seasoned trading analysis and insights. Okay. And the chat with other members is exceptional. Lots of wisdom there. You can go as deep as you want or stay as close to the shore as you want. Okay. My review is based on multiple years of TheoTRADE experience. One more. Okay. Again, been a member of Theo, I think for about 5 years. Okay. Where I had to unlearn, okay, what I had learned in order to learn from real traders. That's one that the reason I'm throwing this up here, look, you got to set aside any preconceived notion. All right. In general, highly recommend and grateful in part for Theo. I just wanted to throw that out there because sometimes people have to unlearn stuff. Well, here's that part where you're going to unlearn. You ready? Okay. Your trading is based on probability. Doesn't matter what you think. It's all based on probability. You can be right 90% of the time, but you can still lose money. You always have to look at that. You could be right 90% of the time, but you can still lose money. I constantly have people that will do a presentation like this. And people on these presentations were like, excuse me, sir, how often are you right? And I'm like, it doesn't matter how often you're right. I can be right 90% of the time. I can make all of you right 90% of the time, but being right does not make money, okay? Probability and profitability are two very different things. So you have to understand that markets are always a trade-off. And I say that markets are a trade-off, higher probability, higher risk. You could be right 90% of the time. The first thing when somebody says, I am right 90% of the time, okay? That's like advertising, it's marketing constantly. I mean, look, we even have some of the marketing, which is, I mean, it's relevant. Okay. I am right. I'm right more than that. I'm right closer to 95% of the time. Okay. But my immediate reaction to that is what happens to the other 5% or 10% of the time? Think about that. That's, look, we got to find edge. We got to make sure that whatever you do, okay, you're going to make money, even when you do take a loss, that you're still going to make money, that you have a repeatable strategy, okay? Because that's exactly what we're going to talk about. We're going to talk about where to find edge, and that's what people are here for. Good. We're going to show you something really important right now. Let's start jumping into this. Okay. I use the very similar example every single time I do this presentation and a presentation about selling options premium, because for those of you, again, that are experienced, just hang with me for 3-4 minutes. I want you to watch this example because this example will make strides towards everything we're going to build on. And it's essential that we understand not what a call or a put is. For those of you that are brand new, you want to understand a call and a put, but that we understand where the edge in the business is coming from. When I say edge, okay, I'm going to show you mathematically how and why this trade works, okay, and that it's repeatable and that it's been working since 2020. By the way, for those of you, if you've ever been to a TheoTRADE presentation before, okay, it's going to look very similar. We started talking about these trades in 2020. Okay, fast forward, we're staring down the face of 2024. and we're still doing something similar. Why? Because this crap works. That's the most important thing. It's the only thing that matters, is that what we're doing, okay, you can execute upon it. It works, okay, and it has not wavered. And that's so important to me. And the very first example we're going to do, this is a stock, okay, and the stock is trading right at 100. Do I buy the stock? No. Do I want to buy the stock? Not really. Why? There's a couple of reasons. First of all, when you buy a $100 stock, it ties up a lot of capital. Not going to deny that. But you buy a $100 stock in this market, I mean, this week was wild. This is a wild week. You know, we dropped like a rock. All of a sudden, your $100 stock is trading at 90. You're like, I'm a loser. You know, that could be not so cost effective. So instead of trading stock, we're going to trade options. In the first example, I'm going to go out. Okay, I'm going to buy a 120 call, 120 call, and that's going to be trading for a $1 debit. Now, time out. Very first trade we're going to talk about is on the buy side, right? And we're going to make this trade last for 3 months at a time. Okay, that's a 120 call. Where's the stock trading? 100. For those of you that have never traded an option in your life, you ready for this? A 120 call. What's a 120 call? Well, first of all, call, okay, gives the right, all right? Call gives the right to buy the stock. Do you want to buy the stock? No. So why are you buying the right to buy the stock? Because basically I want to control the stock without actually owning the stock. So if you buy a 120 call, you have the right to buy the stock at 120. Does that make sense to everybody? Because that's what a call is. It's just the right to buy the stock at 120. Do I have to buy the stock at 120? No, you don't have to buy the stock at 120. Okay. If that call becomes profitable, you just sell the call. Like, no one really goes out and trades options with the intent of like wanting to own stock. They're trading options to try to circumnavigate owning stock, because stock can be expensive. Stock, you know, even with millions of dollars in your account, stock can really run up the bill pretty quickly, right? It'll tie up huge amounts of capital and so forth, especially for traders. We want to get in, we want to get out, we want to get on with our life. You just want to be able to make money. Why am I buying a 120 call? Because clearly I would want to buy the stock at 120, but the stock is at 100. Okay, for it to go to 120 is a big, big move, right? But you have 3 months. Okay, where do you want the stock to go? If you buy a 120 call, you're buying what? It gives me the right to buy the stock at 120. And I'm paying $1 for that. That's it. What am I really paying $1 for? Paying $1, okay, for time. Okay, time to be what? Time to be right, time to be wrong, time to laugh, time to cry. Okay, can the stock get that far? You guys tell me, can the stock get to 120? Can it do it? Okay, find out on the next episode. No, seriously, do you think that stock can get to 120? You have no idea what stock it is. It doesn't make a difference. But can it get there? Sure, why not? It could get to 120. All right. There's a reason that thing is trading for $1, and it's because it has a chance to get there. All right. So you buy a 120 call, gives you the right to buy the stock at 120. Okay. But here's the reality. What's going to happen to you most of the time? Well, if the stock goes to 120, you can make money because you have the right to buy the stock at 120. You have no intent of buying the stock at 120. But if the stock stays flat, you lose your $1. If the stock goes down, you lose your $1. Even if the stock goes up to like 110, you're still going to lose your $1. That stock has to go up at minimum 20% just to get interesting. By the way, even if the stock gets to 120, would you want the right to buy the stock at 120 if it was trading at 120? No. So what's a 120 call worth when the stock is trading at 120? And the answer is nothing, right? So you need that stock not to 120. Okay, you might need that stock as high as like 130 to make it interesting. Now, time out. What's a 120 call worth when the stock is trading at 130? It's trading for, well, you have the right to buy the stock at 120. If the stock's trading at 130, let's say the stock gapped up, it was taken over. Stock goes from 100, goes to 130. Big move to the upside. You have a 120 call. 120 call gives you the right to buy the stock at 120. Everybody else in the world right now has to pay 130. That call, forget about what you paid for it, but that call has intrinsic, what we term real value of at least how much? What's the call worth minimum? You tell me. Okay. Clock's ticking, people. Clock's ticking. I cannot go on. I must make sure that you guys understand. Type in the 120 call. What's a 120 call worth minimum when the stock's trading at 130? It's got to be worth at least what? $10. That's right, $10. A lot of people, they put in 9. I said, no, that's not right. 9 is what you're actually making. You got to understand the real value, all right? You have the right to buy the stock at 120. Everybody else in the world, okay, has to pay 130. That is going to be worth at least $10. Make sense? Okay. But from a probability point of view, be honest with you, there's a lot that can go wrong. If the stock stays flat, you lose the buck. Again, if the stock goes down, you lose the buck. If the stock goes up, you lose the buck. It's a very low probability trade, which is exactly why in my first example, we're not going to buy it. We're going to sell it. We're going to turn around right now. We're going to sell a 120 call, and we're going to sell it for exactly a $1 credit. I'm going to put that down here. We're going to sell a 120 call. We're going to collect exactly a $1 credit. And that option is going to be good for 3 months. Time out immediately when I put this up here. We're going to go out there and we're going to sell a call. Now, I'm only doing this for the example. This is what we would term selling naked. Immediately when people see this, they panic and they go, excuse me, I don't have the margin for that. Excuse me, my brokerage firm won't let me do that. Everybody just calm down. First of all, you don't have to have a lot of margin for that. You can actually do that now with as little as $300, okay? $600 is typical. But right now, volatility and so forth, it depends on the account. If you have a margin account, okay, whether you have an IRA, some of the margin's a little bit different in there, but the margin is nominal. I want people to know that. I will show you how nominal the margin is. I will show you a $5,000 account, and I will show you the margin tied up on a $5,000 account. You guys with me? So don't worry about that. Okay, don't worry about selling naked yet. I'm not going to leave you out there naked swinging in the breeze. I just need you to understand, okay? I just need you guys to understand where we're going with this. So I sell a 120 call for $1. Now, okay, from a probability point of view, is this a high probability trade? You guys tell me, what do you think? From a probability point of view, is this a high probability trade? Okay. And then if you think it is, what do you think the probability in this trade might be? All right. Starting cracking up. It's a yes or no question. Alan put in a T. T's next to Y. I get it, man. I get it. That was awesome. T, yes. Okay. So what do you think the probability in this trade might be? Okay. It might really surprise people of how high it is, incredibly high probability. All right. Let me show you exactly what this breaks down to. First of all, if we sell a 120 call, we're obligating somebody to take stock from us at 120. Now, some of you are brand new in options. The stock's trading at 100. Do I own the stock? No. Do I want to own the stock? No. I do not own stock. I don't want to own the stock. And I'm selling a 120 call and I'm selling it naked. Why? Because I want to collect $1. How long do I have to wait to make a full $1? 3 months. You go, seriously? Seriously, I am not going to wait, okay, 3 months to make a buck. That sounds ridiculous, doesn't it? It does sound ridiculous. It's like way too long. I get it. But I want to show you that this trade overall has an incredibly high probability of success, because if the stock stays flat, you make your buck. If the stock goes anywhere down, you make your buck. Even if the stock goes up significantly, okay, this stock could get all the way to like 115. You're still going to make $1. So you think about what can happen to you, and what can happen to you is a lot can happen in the marketplace, and you're still going to make $1. You're like, whatever, man. It's only $1. Don't worry about that, because anything that works, we can amplify. All I need you to understand is I'm selling a 120 call, okay? And in doing so, I'm collecting $1. But that $1, I don't get to capture all of it until 3 months from now. Now, time out. Let's look to the dark side of the force. What's the dark side? Okay, everything's lovely because this has a high probability. What's the dark side? What if the stock goes from 100 and jumps all the way to 130? If the stock goes from 100 and jumps to 130, ooh, I don't care who you are, that has got to hurt, right? what can you lose on here? You can lose a lot because the 120 call gives somebody the right to take stock from you at 120. You're like, excuse me, I don't own any stock. That's right. You're going to have to buy the stock at 130 to give somebody stock at 120. You're going to lose $10. Can that happen? Yes. We won't let that happen. We'll reduce the risk. Okay. But all I want you to understand at this point in the game, selling a way out of the money option, okay, selling a way out of the money option, right, is an incredibly high probability venture. Now, why 3 months out? Okay, are we okay so far? If we just understand conceptually, right, how far out of the money are we? Look at this. That's 20%, people. That's 20%. Conceptually, I just want you to understand that you're like, okay, so where are you going with this? Oh, don't worry. Okay, you really want to know where we're going with this? The first thing I want people to see is, why did I sell options so far out in time? How many people have seen a decay graph like that? Everybody sees decay graphs. Everybody's seen decay graphs, okay? You may have noticed in my example, I went 3 months out. I went 3 months out. Typically, traders sell shorter dated options. It's one of the reasons you're tuning into this webcast and why criteria is of such critical importance. Criteria is what we built TheoTRADE on. And when I say criteria, the nuances, okay? If you hop onto like some Reddit board today, people are like, you got to trade 0 DTE, man. Zero means 0 days to expiration, okay? Not only do you not want to trade 0 DTE, the edge is against you, okay? This is a time decay graph, and many of you that are experienced, you've seen this, okay? And everything that you've learned in this time decay graph is the closer you come to expiration, listen, okay? The closer you come to expiration, the faster the option is going to decay. Somebody just asked, what about the Greeks, okay? The whole entire trade is based on the Greeks. I just don't show you that right now because if I start talking about delta, gamma, theta, vega, you know, it would panic people. What if everything you knew about time decay was wrong? What if everything you knew about time decay is wrong? Because time decay is theta. We're not trading theta. We're going to trade Ultima. You're like, what the hell is Ultima? Ultima is the volatility, the volatility, the volatility. Okay, you go, what? What if everything you learned about time decay is wrong? What if we took this strategy and applied it to the real market? You want to do it in the real market? Let's do this. Okay, S&Ps today are up 20. Let's go over to the spiders. For those of you that have no idea what the spiders are, anybody here not know the spiders? The spiders, and it's okay. I don't want to pick on anybody, but like the spiders, it's the most prolific product ever developed. It is the most liquid product ever developed, okay? And I say product, I don't care what you trade. I trade Tesla, I trade this. Who cares, okay? I worked for a firm that made markets. We made so many markets and so many different products and couldn't even keep track of them. Predominantly, though, we traded SPX, which is SPY. But here, why am I talking about spiders? And I tell you exactly why I'm talking about spiders. Look down below here. They've already traded 5 million contracts today. Is that liquid? Okay, you're like, that is one deep pool. It's a pool of liquidity, all right? And I like it. So we're going to use spiders in my first example. I'm going to go 119 days out. You go, what? So the spiders, it's just a replication of the S&P 500. I'm going to go 119 days out, which is even further than I said I would go. All right, that's fine. It makes her a great example. We're going to go right here. Okay, I'm picking an option right around $1. So in my first example, I'm even going to write it up here. I want to make sure that everybody understands this. Okay, it's like one of the more pivotal things that we're going to talk about because this is what Ultima is. You're like, what? This is what it is. What it is what? Okay, we're going to go all the way out and we're going to sell. Watch. We're going to sell. I'm going to write it right up here. Okay, the 19th of Jan. Now, Jan is 24, right? We're going to sell the 19th of Jan and we're going to sell the 480 call. And for it, we're going to collect, let's say $1.14. Does that sound good? $1.14. Okay. That's it. Okay, I'm out of here. No, get out on a high note like Costanza, right? So that's it. So if I sell that thing for $1.14, can I sell it at $1.14 right now? You guys, you tell me, it's marks at $1.13, $1.15. Can I sell it for $1.14? I don't know, but I'm gonna find out. Okay, let's come up here. He swings, he shoots to $1.14, filled instantaneously. That was sweet, man. Look, the market's 113. Okay, 115. I filled at $1.14. You go, did you really fill? Yes, I did. You can see the exchange I filled it. Let's do it again in slow motion. He clicks, and now I'm going to work the order. We're 113, 115. I'm actually going to work the order at 115. Hit confirm and send the order. Look, exchange designation. Okay, what's that? You can see actually where I'm working. Work it. I'm working on the Z. So that's my order working on an exchange. So I'm a 115 offer. I'm a 115 offer. If we trade 115, they have to trade through me. So you know what's amazing about a marketplace like this? And I'm serious, it really is amazing. I can fill at 114. Are you looking down below? I can fill at 114, but I can't fill at 115. You know, if you think that markets aren't liquid, it's crazy. It's crazy good is what it is. All right, so close that up for a second. Make sure we got that back up there. So I filled at $1.14. Okay, now what do I do? Time out. I do nothing. I'm going to fast forward approximately 30 days. Just approximately 30 days. Why? Okay. Do you think you can make a lot of money on this in the next 30 days? Okay. Y for yes, N for no. If I allowed, let's say all factors being equal, if I allowed time decay, which I mentioned a moment ago, this is time decay. If I allowed time decay to come out of this, the amount of time in here in 30 days is pretty nominal because we're dealing with an option that's 100 and almost 20 days out. Can I make good money on this? Anybody know? Okay, because look where I am. And I want to bring this into scope right now because I don't think I do a great job of this sometimes. I want to put this into scope. Okay, the market is at 433. That's the spiders. That's the S&P 500's at 433. I am selling a 480 call. That would entail that the S&Ps, this is the spider, here's the chart, okay? The S&Ps would have to get to what? 480 for me to do what? To really start to lose money. Are you with me? Is everybody with me? Okay, because I'm going to go back now. I'm going to even open up a 3-year chart. Have the spiders ever been to 480? No, they actually got to 479.98. Yay! They were 2 cents away from it. Okay, 2 cents away from it. That's the all-time high of the spiders. Okay, you can even open up, I don't care, open up like a 5-year. It's pretty wild, isn't it? So the market right now would have to hit an all-time high for me to lose money. That's not what it's about. I don't care about that. I just wanted to show you on a chart. Look how far we have to move. Got to move monumentally. The market has to hit all-time high. Jerome Powell has to come out, strip off his shirt, and everybody go, I'm lowering interest rates, okay, for the market to get to that level. I just wanted to bring this to your attention, okay? I cannot stress it enough. So just time out for a second. By the way, you don't trade the XSP. I'll show you a better product, Tony, okay? Look, fast forward 30 days. How do we do that? What we're going to do is we sold a 119-day option, and I did sell it, okay? I'm going to fast forward and look at the 84-day expiration. How many days are between what? 119 and 84. What is that? Is it 35 days? It's 35 days. I'm sorry, it's not perfectly 30 days. I'm going to open up the 84-day expiration. And the reason I'm going to open the 84-day expiration, I'm going to look exactly at the 480 calls. I'm going to look at the 480 calls. Why am I looking at the 480 calls? Listen to me. People say that options do not decay rapidly when they're further out in time. Not only do I disagree, the market disagrees. Look how fast the decay is. I sold a Jan 19. Assume the market stays flat, volatility doesn't change. Who cares? Who cares? The option 35 days from now is worth 49 cents. Okay. Then I turn around, basically 30 days from now, I buy the 19th of Jan option, still buying back those 480 calls, and I'll pay. I'll tell you what, I'll even put commissions in over here. Pay 50 cents to get it back. you should be making between 50%, okay, and 65% in 30 days, okay? What do? You don't let the option decay to nothing. You basically just put it on, $1.14, close it for 50 cents, move on, do it again. Put it on for $1.14, close 50, do it again. Why? You're making 50% in what? 30 days. In this case, it's 35 days. And in 35 days, to be frank, you're making a little more than 50%. I wanted to show you a way to make 50%. The market is so far away from me. There's not that stress. You don't have that like underlying fear, like it's going to get me. This is not 0-day expiration trading where you're sitting there like salivating in front of the screen all day. Like, come on, man, come on. It's not what we're doing here. It's completely hands off. It's extraordinarily risk averse. And I ask people constantly, I've been showing this now for 3.5 years. Why are you not doing this? Okay. Why are you not doing this? Right. And we're going to talk about how to reduce risk, because immediately somebody said, what if the market goes up to 440? What if the market goes to 480? About we reduce risk. We haven't shown you the best part of this. Okay. What we first need you to understand that that's repeatable. What we need you to understand is that the decay rate of the options further out in time is phenomenal. How is that possible? Because it's not theta decay. It's what we term Ultima. What's Ultima? It's the volatility, the volatility, the volatility. It's the skew collapsing as we move through time. Okay. And what happens is these 119-day options have a lot of skew. And the second they move forward past a certain date, they collapse. Okay. Why do they collapse? Okay. I can get more into that, but it makes you between 50 and 60% in 30 days for doing nothing. And this is where people go, well, what if the market goes up? What if the market goes down? I'm not going to sell on one side of the market. You're going to see the full Monty here in a moment. All I need you to understand at this point, okay, we are going to talk about calls and we're going to talk about puts. And again, the proof's in the pudding. I never would talk about something that I wouldn't execute in my own account. All of this right here, okay, is Ultima. This is a big portfolio. If you want to see the small portfolio, okay, here's the small. So I have a big portfolio and I have a small portfolio. Clients, they watch either one, they get text messages on them. Then I have actually one that's a much bigger portfolio where I'm trading some heavy trades inside of the Qs and some heavy trades inside of the spiders. There's some size in here, okay? Everything that we're doing right now at TheoTRADE, the core of it is around premium selling, because this crap works. This is where the returns are coming from right now. And I stress to you, this isn't just like, a one and done. Oh, I can trade the spiders. Why can't I do this in the Qs? Of course I can do this in the Qs. Okay, let's go switch products. Let's go to the QQQ. Now, I'll be very frank with you. I didn't look at the Qs before actually doing the presentation. I'm going to go right out again to 119 days. Okay, I'm going to shoot for an option that's trading right around $1. Here's one. Winner, winner. Okay, it's about $1.05. So let me write that up here. If I sell, all right, this is the Jan 19. What is this? 420 call. And that one's trading for, make it $1.05. By the way, I would fill immediately here at $1.05. Okay. Turn around real quick and open up the 84-day options. The 84-day options, go right to the 420s, 420, 420, 420. There they are. They're trading for 41 cents. Okay. So about 35 days after this, I just buy it back. So this was the sell. We turn around, buy it back, and we buy those 420 calls. What do we pay for them? Approximately 40 cents. You should be making between 50, okay, to 60% inside of about 30 to 35 days, and you're out. Okay. By the way, this is not bearish. It's absolutely not bearish. Okay. I'm just teaching it with calls right now. Can you do this with puts? Of course you can do it with puts. You have to do it with puts. Okay. And if you look at my account, okay, there's a call, there's a put, there's a put, there's a put, there's a put. Okay. I got both sides on. I just want to show you, if you do this with puts, okay, puts are trading for twice the premium. They're literally trading for twice the premium. Okay. It's good stuff. I don't want you to think that this is a bullish or bearish. Okay. Can't stand that when people are like, is this bullish? Is this bearish? Okay. No, there's nothing to do with it. Directional bias, not going to be here. Look, This is the stuff you've got to learn right now. Okay. And what we're going to show you is how to do this and how to do it effectively. And before I go any further, okay, before I go any further in here, okay, and people are like, how come you're not selling a put? Well, why am I not selling a put? Because we haven't talked about a hedge yet, right? And we'll show about risk mitigation. The other thing is when people are new to options, puts confuse everybody. Calls are the right to buy. Puts are the right to sell. We're selling the right to sell blows everybody's minds, okay? In this particular case, when you're looking at this particular trade, it is essential to understand that it is a repeatable strategy, okay? That I can do this again and again and again and again. The other thing that people constantly fight me on this is they say, what about margin? How many people here are concerned about margin? Okay, before I've even actually gotten into the full brunt of the strategy, how many people are concerned about margin? Nobody is? All right, because otherwise I won't go into it. So if that's the case, if you're not concerned about margins, fine, we'll move on. The decay that you're familiar with is not, again, accurate. Okay, the decay is not accurate. Oh, now people are coming out of the woodwork and worried about margin in here. If you want to do this with a small account, here, let's jump to a small account. So this account that I'm in right now has about $100,000 in it. I'm jumping to an account right now. Okay, the account that we're in right here, right now, has 5,000 bucks in it. I opened up the account to make a point. The margin held on here. Somebody said, "How come you don't do this on puts?" I don't know. What's that right there? That's 3 contracts of puts. Not 1, not 2, but 3 contracts of puts. Don't worry about the Microsoft and XLK trade. So this is 3 contracts of puts. It's tying up $1,800 in margin. So you can't say that you can't do it because it's a $5,000 account. You can also do this in an IRA. The other account I was just showing you a moment ago is my IRA. It's one of my IRAs. But and by the way, if you don't like, you're like, how do you know that's your IRA? This is my IRA. And if you want to see how you know it's the IRA, okay, when I hit review and send, see where it says SEP, okay, right there, that's an IRA. That's my SEP IRA. But I also wanted to show you, probably even more importantly, that you can do this. This is an individual margin account. And again, I've got a bunch of accounts in here. I don't mind showing you, okay, what's in the account. All right, as I said, the buying power left in the one account is $4,200. And I have the Zaba account of about $200,000. Okay, then I have a SEP IRA. It's got about 100 grand of buying power in it. I show everything here. Okay, but in the $5,000 account, okay, this is the $5,000 account. I'm not selling 1 or 2. I'm selling a 3 lot in there. Okay, and you just set up a regular IRA. You just set up an IRA, or you can even move a 401k into an IRA, and you can sell premium in there to your heart's content. But this is only tying up $1,800 of margin, and that's here on TastyTrade. That's not like my number or whatever. It's TastyTrade. Now, for those of you that don't know this, thinkorswim and TastyTrade are, it's the same founders. I worked with thinkorswim, TD Ameritrade, 15 years. When the founder of thinkorswim left, okay, I left shortly thereafter. I had signed a 5-year deal with TD Ameritrade, which is a really good deal for me. But I left a few years after he left. He started Tasty. I left and did my own thing and started obviously TheoTRADE. Tasty is now, again, it looks and feels a lot like thinkorswim, but I just wanted to show you the margin on here because it's just essential that you understand that anybody can do this at any size account. Okay. Now, what we have to really focus on is, look, the trade looks easy enough, but what happens when you're wrong? What happens when you're wrong? Because 90% trade sounds great. And by the way, the trade that we were showing you a moment ago, so we were here in the spiders, right? And we sold this option. So we sold this option a moment ago here in the spiders. And what's the probability? You can actually come in here and go probability out of the money. The trade has a 92% probability associated with it. Okay, 92% probability. So 90% sounds great, but then 10% of the time the market just tears you apart. When you trade high probability strategies and you're wrong, the market absolutely torments you, hammers you. Okay, how many people here have ever traded an iron condor? Anybody? Has anybody here ever traded an iron condor? Okay, because in the iron condor is the strategy that I've probably seen the most damage on at my career at both thinkorswim and TD Ameritrade. And by the way, I know this sounds kind of weird, but when it comes down to it, look, and I say this on the bottom of the screen, and I really mean it. I could see everything that you did, all right, for the better part of 15 years. During the financial crisis, okay, I sat on the risk management committee of all of thinkorswim, okay, and I was the number 2 on the risk management committee, and it was Tom Sosnoff was number 1. I was number 2. Joe Kinahan was like number 3 on the committee. And basically the committee, you get to see the worst portions of everybody's position. So no matter what you ever think you've done, you're like, oh man, he's never seen this before. Believe me, it's like a doctor. You're like, I've seen it all before. Okay. I've damaging stuff, but people do these trades called iron condors. And, they go out and they take a class to learn like a strategy called an iron condor. And I'm sure some people do this. And I'm just going to draw it up here really quick because I'm going to show you this is exactly what happens to you, okay, with an iron condor. The iron condor, like the spiders right now are trading like 433. They go out, okay, and they sell a call, and then they buy a call, and then they sell a put, okay, and then they turn around and buy a put. So all you need the market to do is stay between here and here. Anywhere in here, you're going to make money. And the trade can actually be done extraordinarily high probability. You can do this trade with a 95% probability of success, okay? Timeout. 95% probability does not necessarily mean that the trade has edge. Edge is a mathematical repeatable strategy that if you did the same trade 1,000 times, there would be profitability at the end of it. This is what we term a market neutral trade. This trade also, it has no edge. There's absolutely unequivocally no edge in this trade in today's marketplace. And I'm saying that without unequivocation. You don't hear me hesitating. You do this trade over time, you will lose money unequivocally. Okay. It is a mathematical certainty, okay, that you lose money. Now, there could be a day where like, ooh, there's edge for like a day. Do the iron condor. And what people do is they go into this. People take a class for $500 and they learn how to do this trade. So for $500, you go out and they say, okay, we're going to sell me an iron condor. And you do it and you learn to do it. And the first time you do a 1 contract trade in the spiders. Okay. And the trade has like a 95% chance. And you're like, boom, yeah, I made money. Then you go out and do it in month number 2. And month number 2, all of a sudden you step up and do 5 contracts in the spiders. You're like, yeah, I do 5 contracts. Now you're doing 5 contracts and that one makes money. On the third month, you figure out this product called the SPX. You do a 1 lot in the SPX. Now, for those of you that have no idea what the SPX is exactly 10 times the size of the spiders. So 1 contract in the SPX is the same as doing 10 contracts in the spiders. So in month number 1, you're chicken little. On month number 2, you're starting to squawk your feathers, okay? In month number 3, you don't even realize you stepped up into the SPX. That's the mother of all products, better known as the Widowmaker, okay? So on the 3rd month, you're like, yeah, I made money. You're 3 months in a row. Nobody ever thought to themselves, I'm doing a trade that has a 90% probability of success. It's just breeding what, okay? It's of course breeding, a trader that has no idea what's coming. On month number 4, you step into the SPX. Now you do 10 contracts in the SPX. Do you realize that in month number 4, with a 10 lot in the SPX, that's the equivalent, okay, of doing 100 contracts in the spiders. And that's your 4th month in the trade. Do you know what happens on month number 4? Okay, you put on 10 contracts in the SPX and literally like the market goes, we got one. And then the market moves huge. And what happens? Tears start running down your face. You get completely wiped out. I watch people so many times do this. Okay, it's ridiculous. It's absolutely ridiculous. They get wiped out. They lose at least 50% of their entire account because they just built. Bam, got hit by a Mack truck over there. And it's brutal. It's absolutely brutal to watch. It's a train wreck. Your losses exceed the gains in the previous 3 trades. I know it's like I can see your account. For 15 years, I could. And then, by the way, has anybody ever done that before? I'll wait a minute. Okay. Nobody's ever done that. People admitting it is the first step. This is trading. Okay. People admitting it is the first step. All right. I like you got to come out and like realize what this business is. It's the same things done again and again and again. Okay. I like it. I like what somebody said, not yet. Okay. The day is young. You know what's going on right now? People are doing this in 0 days to expiration trades where the edge is completely against you. It's like mathematically you're screwed if you're selling short duration options right now. I love showing that to people because they don't look, you know, at anything more than the surface. Your strategy does 90%. 90% means nothing. 90% is a joke. It doesn't tell you mathematically you're going to make money because the other 10% of the time you get absolutely destroyed. Okay. You got to think about that. By the way, people, so they take a class for $500 to learn how to do this. And then they're like, but it worked before I lost 50%. So then they take another class on how to fix it. By the way, I do not like fixing. And I'm going to make this really clear. You fix a trade, you might as well just get out and get a shovel. Get a shovel, dig yourself a little hole and bury yourself into it, because I am so cynical, okay, on fixing good trades gone bad. It's just, you got to learn how to do this right. I'm just going to cut it off right there. You try to fix stuff, people go, it's not a fix. I actually was arguing with an individual on email a couple months ago. He's like, it's not fixing, it's morphing. Okay. You take an amalgamation, throw it together, it's still crap. Okay. It's like this, you know, you take a car, drive it off a cliff. Okay. Take a car, drive it off a cliff and bring it to a body shop. Okay. What are they going to say? They go, it's totaled, leave it alone. You go, no. I want this car to be as perfect as the day that I bought it. They go back to the dealership. We're done here. Listen, you need to learn how to do this right. What options premium is about, okay, is a lot more than just going out and selling one call. Okay, because somebody immediately was like, excuse me, why are you not selling puts? Of course I sell puts. You can see the puts right here. Okay, but there's a lot more to it. And I'm actually going to show you what I term, this is kind of what I term the full Monty. You ready? Okay. Selling premium, the most important thing about selling premium is simply this. We go back over to thinkorswim for a second. Okay. Do you see this 480 call? If you could make, and just listen to me for a second, if you could make 50% or more in 30 days with minimal margin tying this trade up, okay, why are you not doing it? And of course, people say, well, I could do it. And then the other question is, how often would you want to do it? How often would you want to do it? And the survey says a lot, okay? A lot. You got to do that. Does that make sense? Like, the thing that people don't realize is trading, it's not what you think, it's not what you know. And I'm not trying to be facetious in that. Everything that you're bombarded with on a day-to-day basis, and we're going to talk about like the full Monty, and in the next 5 minutes, I'm going to show you something that's incredibly, incredibly insightful, okay? Look, okay? When you're trading, everything you're bombarded with, like on CNBC. Look, I do CNBC and I get on TD Ameritrade TV, which is now Charles Schwab TV, whatever it is, and I talk about trades. But you have like a little producer chirping in your ear and they're like, talk about Apple, be bullish in Apple. That's not really what we do in this business. Okay, the business is much more. Business is business. It's inventory management. If you know that you can make 50% on anything that you do, okay, and I'm deadly serious about this, on anything you do. Here, I always play with this while I'm actually talking to you. You know what this is? It's a fidget spinner. Okay, you're like, aren't those for children? Yes, or very large adults with ADD. It works beautifully. So does 6 monitors. You know, people say, what's calming to you? A fidget spinner and 6 monitors is very calming to me. That, and I've had enough caffeine to probably kill a very large animal. Anyway, here's a fidget spinner. Okay, these things were all the rage a couple of years ago. And, you know, funny enough, I've had these things forever too. They were all the rage. But imagine that I can get these fidget spinners for 50 cents. I buy them in bulk for 50 cents, but I can sell them all day long on Amazon for $1. What's my edge? My edge is 50 cents. But then I have to ship the thing. I got employees involved. There's some overhead, right? The one thing, okay? I like what somebody said. I have one of those. It doesn't seem to help me. You got to get more monitors at the same time because you'll sit here and go like this all day long. Okay. That, and I don't really sit. I wobble. I have a wobble stool and a sit stand desk. It's beautiful. Okay. I'm pretty sure this business makes you a little ADD. We are now in the fidget spinner business. Okay. The key to making money in a fidget spinner is that I know that I can sell them for $1, and I know I can get them in bulk for 50 cents. The key then, volume. That's it. You got to stop looking at trading the way you've been thinking about it. And this is the part where I have to tell people, like, you have to unlearn certain things. Okay. Trading isn't what you classically think. It's not about turning on CNBC and watching this person go, I'm bullish, I'm bearish. And this economist, I'm so bullish. By the way, analysts can't even trade. If you're an analyst for Goldman Sachs, you are excluded from trading. Okay. It's a contractual obligation. They trade. Okay. That's an SEC violation. Naughty monkey. By the way, when I worked at a brokerage firm, I could trade, but I wasn't allowed to be involved in IPOs. That's it. IPOs, no. Trading, yes. Okay. Wasn't allowed to trade our stock, but I was an insider. Anyway, when looking at this, stop thinking about it being the 480 calls as bullish or bearish. I wanted to call out, okay, because people are like, well, the trade you did is bearish. Not really. Sold the 480s, man. We're trading at 430. We can go up like a mile and be like, come get me, and I'll still be fine. Okay. Got to think about it as inventory management. When I start talking about inventory management, this is the part that starts to elude people. Okay. Look, where are the spiders trading? Okay. Where's the spiders trading? And again, let's call them 430. Let's just round it to 430. Okay. We're going to sell some 480 calls. And then if I also wanted to sell puts, could I do that? Sure. Which puts would I sell? This works, 360s. Let's go do it. Okay. So I'm going to make a quick point over here. The spiders, I'm just going to pull this out and we're going to get crazy. So here's the SPY. Here's the SPY. Okay. And the SPY is trading right at what? 430. I know it. I'm just rounding right now. And I'm going to go out. Okay. And I'm going to sell a 480 call. Right? I'm going to sell a 480 call. And for that, I'm going to collect $1. I am simultaneously going to be selling the 360 put. Ironically, for that, I'm going to collect $2. Okay, you look at the trade and you go, no way, really? You can collect that much for the puts? Yeah. By the way, you want to see this? And like, when I say in real time, you go, do you really do those trades? Oh, here's yesterday. Let me just go into yesterday. There's the ES. Okay. It's back a couple days. Okay. These are the trades I did yesterday. Sold the call, sold the put. There it is. 48.50, 3,600. I sold it for $30. That's the same as $3 in spiders. I just wanted you to see the trade. Okay. So I sell a call and sell a put. I'm not done yet. Couple days later, let's say the market rallies up. Market rallies up. I'm going to turn around. Probably going to sell. All right. Like a 490 call. I collect $1 for it. And before I know it, getting a little crazy over here. I might turn around, sell 365 puts, collect another $2. Okay, then the market sells off big. I'm turning around, probably going to sell 350 puts, collect maybe $2 for those here, and probably end up selling. I don't know. Let's make this the 475 calls, collected down to $1 there. What is that? That's my inventory. Okay. Time to expiration. Yeah, it's out there. It's out there. And I'm loving every minute of it. Okay. I just showed you 3 months. So I sell 3 calls and I sell 3 puts. And ironically, you saw in my account a moment ago, I had 3 puts left in there, but no calls because I had already covered the calls. Covered means bought back, right? What's wrong with this picture? What's wrong with this picture? Okay. There is something wrong. And it's something that you might not see. I'm going to tell you exactly what's wrong. One big move of the marketplace and it's over. You're dead. Okay. If you're in the fidget spinner business and you've really got a big business going, what are you going to have to do? You're going to end up in your fidget spinner business, probably have to buy insurance. Okay. Insurance for an employee or some type of insurance, on your fidget spinners. Okay. There could be a fidget spinner fire, man. The point that I'm trying to make is, what do you not have in this picture that you need? Okay. You need a sacrificial lamb. You need a hedge. You cannot operate without a hedge. Those that do, okay, fail. Eventually they fail, they fall, and they lose unequivocally. Look, I need people to understand. It's been 15 years in the brokerage business. Again, there's nothing I haven't seen. Those that survive hedge. Those that don't. They don't survive. Okay. What is a hedge? A hedge is a risk mitigation tool. Now, does the hedge cost money? Yes, but it's nominal. But the hedge is the cost of doing business. Like right now, and I'm serious. I was talking to somebody the other day. Okay. I just came back. I live in St. Croix, the Virgin Islands. And I just came back the other day and I was talking to an Uber driver because I got in at like 1 a.m. and not asking my wife to pick me up at like 1 a.m. So I took an Uber back to the house, only about 15-minute drive back to the house. So I'm taking an Uber and I'm asking them like a million questions, like, what does it cost to insure? What does it cost this? What does it cost this? It's just the cost of doing business. But I wanted to know how much edge there was in that business, which by the way, is not very good. I was very disappointed in hearing how little edge there was in the Uber business. Okay. And of course the person was asking what I do. And I'm like, basically the same thing, you know. You have to have a cost of doing business. And the cost of doing business here is the hedge. Like the way I think about it, again, most of the year, like I'm living on the island, and I always think about it as a sacrificial lamb. You walk up the mountain every month and throw a lamb into the volcano so the volcano doesn't kill you. It's a sacrificial lamb. There are 3 primary hedges that we use, okay? Because what you can't predict, a huge move up and a huge move down. And somebody said, like insurance, absolutely. Okay, we're not going to buy like calls. I'm actually going to show you exactly what the hedges are, but you have to understand, enter the hedges. It's like enter the dragon, enter the hedges. Because if you don't have hedges, you don't have strategy. Like you can't operate an Uber without types of insurance. Okay, and it's expensive. You can't operate in any business these days without something. The cost of doing business in here, if you're not willing to hedge, then don't do it. I'm serious about that too. People, I'm not willing to hedge. I'm going to show you exactly what my hedges are. There are 3 primary hedges that I use. I like to use, okay, RTS, which is actually stands for risk twist. All right, it's a risk twist spread. Number 2, this is the one I'm actually going to show you exactly how to use. A VIX vol spread, okay? And number 3 is what we term a gamma iron. Okay, that's supposed to say iron. I promise it says iron. Erase the gamma iron. Those are 3 types of hedges. Enter the hedges. What are they again? A risk twist spread, a VIX vol spread. Like, listen, man, you don't know the names. Doesn't matter whether you know the names. I'm going to show you exactly what it is. How many people here know what the VIX is? Okay, the VIX, the S&P 500 volatility index. Okay, here's the thing to know about VIX. When the market goes down, and I'm not talking the market literally goes down, forget about that, okay? If the market really goes down, like yesterday was going down. Like we were rocking yesterday. The S&Ps, what we call the SPOOs were off 80 yesterday. So the S&P sold off 80 handles yesterday. It's a big move. When the market goes down, the VIX goes where? Ba-boom, up, mushroom cloud up, okay? Let me show you what and how a hedge is. We're going to put a tiny little position right here. When do we do it? Right now, always. Okay, you can't trade without it. You're going to have this little tiny trade right here, and it's what we call, okay, a VIX vol spread. Why do we have it there? See these S&Ps? Right now they're trading at 430. One day you're going to wake up. Forget about when the market's open. I don't care. The market's tanking right now. Screw it. One day you're going to wake up. You're not even going to be able to trade. Okay. What do you mean you're not going to be able to trade? How many people here have lived through a limit down event? Everybody should say yes, because we went limit down every other day during COVID. And the COVID lockdowns, limit down, limit down, limit down, day after day. What's limit down? The market locked up overnight. Everybody did. They didn't even know what it is. The futures went limit down. The move used to be a 5% move overnight, locked up the market. Now it's a 7% move overnight. 7% move, okay? If the market moves 7% or more at night, they lock them up. And what would happen is when the market eventually did open, the VIX would erupt. What a hedge is, if this market comes ripping to the downside, VIX explodes, providing an umbrella. Does it cover 100% of the loss? Nope. But I'll tell you what it does do. okay? It keeps you completely sane in an insane world. All of a sudden, it's like, boom, the marketplace explodes. Your VIX trade comes to action. You're like, oh, but still my heart. It's a good thing you got a VIX trade on. Otherwise, you'd be done. You'd be done because no one can handle. I've been doing this for 25 freaking years. Okay. I've been involved in sell-offs you don't even want to think about. Okay. I was working for a market making firm when, September 11th happened. That was terrifying, absolutely terrifying, not from just the perspective of the marketplace. Okay. But obviously where we were at the time, we're like, yeah, this is not a good position. I mean, I can't tell you how many times that without hedges, right, it was over. I traded as a risk manager through thinkorswim, through the financial crisis. It's insane. Those that hedge, they didn't just survive, man. They killed it in that time frame. It was unbelievable, right? Hedge now or forever hold your peace. By the way, to the upside, there's a hedge to the upside too. It's called a gamma iron. You have to pass through the iron to actually lose money to the upside. That, people, is inventory management. I don't care what you think about markets. Yeah, there's better times to sell calls. There's better times to sell puts. That's what we use the auto expected move for. But generally speaking, this is what you want to learn, okay? You're in the fidget spinner business. It's an inventory management business. Trading is an inventory management business, okay? And people say, hey, look, you want to see it in action, right? Here's the entire thing in action. Doesn't look like much. Look, there's a put, there's a call, there's a put, there's a hedge. Doesn't look like much. You're like, okay. It's by the way, there's not much going on. There's a put, there's a call, there's a put. Okay, that's it. That's what inventory looks like. You really want to see a bigger inventory? I'm actually going to show you a decent size inventory now. Okay, this is one where you would have to have a pretty good size account to do this. So here's actually a trade. See a little VIX trade down below? Little VIX trade. What's it doing? Save me. Yesterday, the market tanked. Look at the P&L from the open on this one. It's up $1,300. That thing is not, this is a very recent trade too. Okay. Some QQQ, some spider. Okay. What do I have on here? Inventory. Okay. Inventory. To demonstrate it, yeah, I need only go right here. That's actually my theta decay. Volatility exposure is nominal. This is beautiful. This is what inventory looks like. Just splat, 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 couple of positions here. Okay, dash of salt there. You're ready to roll. People, look, this is why you want to sell premium. You can do it in a small account, under $5,000, and I'm doing it. Okay, I'm doing it in a $5,000 account. Okay, you don't put all the inventory on in one day. You have to work into it. It's kind of like fidget spinners. You start the fidget spinner business. You're like, I don't really know what I'm doing. Start with 2 or 3. Okay. We do this in a particular account. All right. And we have a $5,000 account. You want to follow it? That's exactly what we're talking about. If you missed, okay, what this is, it's called Ultima Alert. We don't just talk about trades, we execute them. When we execute them, it immediately comes out to you in a text message. Why? Okay. Why not? If I'm going to trade it, you should be able to trade it with me. I don't have a problem with that. You can do this in a small account, produces positive decay, can actually enhance existing positions. You could be wrong in market direction and still produce very profitable trades. You never need to buy or sell the stock. Has an incredibly high probability of success. I'm going to tell you right now, okay, you're going to need this in your life. There's not a lot of things that I'm adamant about. There's one thing I am very adamant about, and that's this, okay? The future of the market, it's not about picking the right stock anymore. It's over, okay? You had your time, that's over. Now it's going to be about premium selling. Now it's going to be about risk mitigation tactics. That's it, okay? Look, selling premium could potentially bring in consistent returns while minimizing risk. You want to learn how to do this? We're going to discuss criteria. Criteria is the specifics, but before I do that, I want to show you live trading examples. And when I call them examples, look, variations of everything I'm going to show you can be done with as little as $2,000 in a funded brokerage account, okay? All right, and can be done inside of retirement accounts. And I'm very adamant about the retirement account. What I'm going to show you is these, okay, are trade alerts. I'm starting with something on Tesla because I just wanted you guys to understand this, okay? I'm starting with Tesla, right? Why Tesla? Because I just thought it was kind of a cool example in here. Basically, what I've done on Tesla, and if you're looking at the trade right now, this is all the way back in 2021. You're like, why are you using 2021? Because I'm about to give you results all the way from 21 up to present day. This is the beginning of 2021. Look, the exact date and time of the execution, the opening transaction, the closing transaction. And if you look at this, they're all live trades. What I'm showing you are trades, okay? I have to call them examples, okay? These are live trades. These are trades that I have executed. These are trades that we have texted out. The moment that I execute in the account, there is an algorithm that looks at the account, spits out the trade to you in a text message, okay? We built technology to basically say, like, look, if I'm going to trade it, you can trade it along with me. This particular trade, if you're kind of curious, like, where does this come from? Okay, comes right from thinkorswim. So this is the account statement in here. This is the S&Ps, just to show you. Okay, like I don't know, let's show you like the last 300 days. How many trades have I done in the S&P futures over the last 300 days? The answer is, survey says, okay, just showing you right now in the trade history, there's about 76 filled. Okay, in my order history, there's 76 trades. So if you're thinking that this is going to be constant trading, you're wrong. In the S&Ps, I traded 76 times over 300 days. And this is, look, you can see to open to close, to open to close, to open to close. This has all the hedges. It has everything in it. All I did was took this and I copied and pasted it into here. Okay. Okay. And there's, again, this is not a vertical. It's just, I just wanted to start with this one. Let me actually show you. Okay. This trade was done for a 58% return. This next one's a bond short put. Bond short put, 57% return. Open for 14 ticks, close for 6 ticks. Okay. Another bond short put, 53% return. IWM, 62% return. Again, all we did is took the trades after executing them, copied them out of thinkorswim and posted them right here into my slide deck. 53% return, 76% return, 60% return. By the way, almost everything I do, okay, is index or index related. I have no problem telling people that. I like to trade spiders. I like to trade IWM. I like to trade the QQQ. I like to trade the S&Ps. We'll talk about that here momentarily, okay? So this doesn't even show you the hedge. This trade doesn't show you the hedge. This is just the SPY trade. To open to close, 60% return, right? Okay, moving on. 50% return, 51% return, 57% return, 49% return, 50% return, 62% return, 53% return, 50% return, 50% return, for 64% return, 53%. We're only up to this. 57%, 56%, 50%, 54%, 19% loss. By the way, losses happen. It happens. Not often, but it happens. These are really high probability trades. 54%, 52%, 49%, 47%, 49%, 51%. I'm just scrolling through, okay? I'm just showing you trade after trade after trade after trade. We're only into, of course, April of 21. And as I start scrolling through, once you become more accustomed, okay, to these smaller trades, okay, you can step up into the big boy products. Now, the big boy products, as I'm scrolling through here, and by the way, if you see the common theme, it's about 50%. Okay, I shoot for about 50%. Okay, then we stepped up here to the ES. So these are all pieces of inventory. You're constantly layering inventory on as we're moving through time. You're not just selling a call or just selling a put. You're constantly manipulating the position because sometimes blue fidget spinners are on sale and sometimes white fidget spinners, okay, are on sale. And white fidget spinners, let's say, are calls and blue fidget spinners are puts. There's better times to sell calls and better times to sell puts. And sometimes we sell both fidget spinners at the same time. The point that I'm trying to make over here, okay, inventory management is just that. All right, you're just managing the inventory through time. And if this like looks complex, because a moment ago, you know, I brought up this stuff a moment ago where I was showing you like, you know, this the full Monty on here. Let's see if I still have it on here. Yep, there it is. When I brought all this up, you're like, oh, it's a hideous, look away. Okay. With all of that on there, the bottom line is, okay, it's a lot easier than you think. You just put on inventory over time and close it when it's time. All right. As I scroll through here, then we give some trades like Christmas tree spreads. Look at this. It's $21 credit closed for a $3 credit. This is a cool trade. This actually has the hedge built into it. So it's a SPY trade with a hedge built in with an 85% return and Qs. Okay. I just keep flipping through. And by the way, not everything works out beautifully. This is a trade that this one got this got chaos, man. This was a crazy time. This is in 2021. The market was straight up, and I'm like selling calls. I'm like, oh, okay. I mean, not everything works out perfectly, but over time, strategy works. Another Christmas tree trade for a 92% return. Okay. Here we are turning the corner into 2022. All right. Another Christmas tree trade. Look at this. $3,953 profit on one unit. Do one unit of the trade, it was worth $4 grand. Okay. And I'm just scrolling through return after return after return just to understand. Okay. And by the way, at some point in here, just gonna cut off. I'll show you in a second. This is $1,000. Okay. What I just showed you is officially, okay, 18 months. That's 18 months right there of results. And immediately people go, oh, well, what's going on now? Here. This is TheoTRADE. This is TheoTRADE. What's TheoTRADE? Okay. What you're looking at right now is TheoTRADE. And in fact, you know what? I can even, this is live right now, so I apologize. This is actually a live chat room. Okay. And as you guys are actually looking through here, these are our some of our instructors and our clientele talking to one another. At any given point in time, there's 3,000 to 5,000 people in here a day. Okay, so that's Theo. But inside of Theo, okay, here's the portfolio. This is the Ultima TheoTheta portfolio. You get to see everything that we do. Okay, this is all opening trades. Okay, on top, closing trades down to the bottom. But all you have to do is get text messaging. You put your email address in here. We verify that you're a client. Boom, start sending text messages to you right then and there. Okay, it's a great way to do it because not only do we have text messaging, we also do push notification. So I'll show you guys something quite interesting on here. Make sure I've got it up here. I know you guys can see that, but that's TheoTRADE. It's an application that we built. And the application that we built does push notifications. So every time we execute, it immediately populates into your phone. It'll push a text message and do a push notification. You can do both, okay, or neither if you don't want to be bothered by it. But it's something that's one of the things that we're doing here. I mean, look, this is Theo, and you can see every trade that we've done. And I just wanted to show you the track record is there for everything. I just wanted to show you a solid 18 months in here. Look, if you don't have a lot of time, it's not a problem, okay? A fraction of your time is enough to see results. Selling premium is very, very hands-off, okay? And TheoTRADE now provides real-time trade alerts. For those of you in the past, if you looked at TheoTRADE, for instance, 3 years ago, okay, TheoTRADE was very much education-based. The single biggest differentiating factor for TheoTRADE now, okay, right now, we do trade alerts. Trade alerts are huge because we have a niche in the marketplace. I am very comfortable trading, okay, and have been for the past 25 years. So when I execute, you get to see exactly what we do, and you can choose to copy that in your own account. And again, what better time, all right, to learn new skill set? Maybe you don't have time to learn the new skill set. People get busy, okay? Selling premium is a wonderful hedge, and I say for recessionary times. Look, the one thing that I point out throughout the course consistently today is we could be in bouts of volatility for years to come, okay? Follow the real-time trade alerts. Just follow the real-time trade alerts, all right? What our members are saying. If you're serious about trading, TheoTRADE is by far the best resource out there. If you cannot make dollars, you're not paying attention. They even have a hands-off approach to trading as well if you don't really want to learn, okay? Trade on your own. Their instructor's the best in the business. That actually comes June 13th, 2023. Some of the characteristics, attributes of this are undeniable. You never have to buy or sell the stock. Risk is kind of tailored, and you can continue to kind of fine tune that risk to your comfort level. You can vary time frames, minimize risk even further. You're never going to use a stop order. Probability of profitability is incredibly high. Most of the time, you're not going to use hedges. Hedges are like a once in a year kind of thing. It's an excellent tool for those seeking to build returns off of your account, but it's also, this strategy can be used to enhance one stock's portfolio, and new products allow for the sale of options in nearly any account size. Look, building a portfolio of options. Do not let the options portion of this presentation intimidate you. Okay, Do not let that intimidate you. I love the question that came in. How much does the hedge cost? I can show you that in a couple of moments. Okay. The hedge, I can actually show you to do the hedge for free in VIX. Okay. Selling premium can initially be done for very minimal credits and very minimal risk. Everybody, okay, no matter where you're coming from, what walk of life, okay, let the alerts initially do the work for you. Why? You got to build up to it. Again, you're getting into something that, some of you have, maybe sold some option premium in the past. Some of you kind of know the business a little bit, but you haven't done this. Okay. Let the alerts do the work for you. You can sell Ultima premium, okay, and minimize risk. Do not let options intimidate you. I said this to start. Options are the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market, okay? But you need to learn, okay, to harness the power of options. You need these strategies for the foreseeable market future. Again, it's one of the realities of this business right now is, what's the next stock that's going to go up? Look at the IPOs in the last couple of days. Okay, I'm serious. You don't take my word for it. Look at the IPOs in the last couple of days, right? Where are the IPOs in the last couple of days? Okay, because everybody's looking for the latest, greatest thing. Nothing could be more dire for the marketplace. That's ARM Holdings. Okay, where is it? $50. Where did it come out? Yeah, you couldn't have bought it till about 60. You're down. Where's Cart? Okay, Instacart getting hammered. It's absolutely hammered. I mean, these things are getting killed. This is not about stock picking. You're going to need this. More importantly, again, once you get comfortable with options, and if you have no experience in options, it can take a couple hours. We're going to sit down with you for a couple of hours, and we're going to kind of massage you through the process over here. We now provide real-time alerts. Okay, this is what you need to know to successfully sell Ultima Premium. You got to know what stocks are underlying. Candidates are going to make the best candidate. What are we going to sell premium in? What are going to be those best candidates? Like what products? By the way, stocks, indices make the best Ultima Premium selling candidates. I can't even say the word underlyings, products, right? How about this? We're going to trade in many cases. We like to use these S&P options on futures. You go, oh, I've never traded that before. You want to know why you want to use this? There's no day trade rule. Not that we're day trading. There's no day trade rule in here. You want to know why we use this? Because margin is negligible and they allow it in an IRA. And you can go out there, you can sell them naked, hedge in a different product. It's awesome. Yeah, you would never want to trade the XSP. This is 100 times better product. And this product, okay, this MES, okay, it actually falls under Rule 1256, 60-40 rule. It has, okay, tax treatment that's even better. This product is phenomenal, seriously. Okay, what volatility should I seek out? Too much volatility, you're dead. Too little volatility, you're dead. You can't do this in like NVIDIA. You'll get killed in NVIDIA. But at the same time, you wouldn't want to do it in Walmart. There's not enough volatility. There's a sweet spot. What options expiration do I select? Have you guys seen like all the different option expiration selections lately? Okay, seriously, if you looked at like SPX and look at this, just bear with me for a second. Let's go to spiders. Spiders are a little easier to understand, but you go to something like, whoops, dope. Okay, swing and a miss. If you go to something like spiders, look at all the option expirations to select from in spiders. Okay, and when I say that, I'm like, look, there's 1 day option, 2 day option, there's daily options. Look how many option expirations there are. I'm scrolling through this. You got to pick the right expiration cycle. What should be the delta of the option I sell? What should be the delta, the options I buy against the position? That is, what do I hedge? How do I create a hedge? Like you got to figure out how to create the hedge. How do I build the position? What do you mean build a position? How many of those VIX spreads do I need to mitigate risk on the spiders? How many VIX spreads do I need to mitigate risk on an ES, which is an option on futures contract? Okay. Do I need a large amount of capital in my account to do this? Of course not. What's the right amount of risk for me? By the way, the large amount of capital in your account, you don't need a large amount of capital. You can have $5,000 and actually do it in an IRA. Anything you want. You do anything you want. By the way, you can sell naked premium now in an IRA. They changed the rules 3.5 years ago. They didn't tell anybody. Okay, you can do anything you want. Right amount of risk for you. We can fine tune that. What are the percentage returns supposed to be? Okay, how do I protect myself from market crashes? You must have hedges. You got to learn the risk twist. You got to learn VIX volatility spreads. Okay, let me show you exactly here what we're doing at TheoTRADE. TheoTRADE creates recipes in trading. And now real-time trade alerts. When any of those trading opportunities arise, we're sending out real-time trade alerts. Look, trading is about answering the what if. What might be a good stock or ETF candidate to sell premium? What is the correct options expiration cycle to sell options in? How much capital do I commit to generating premium? What option prices which option strikes do I sell? What strike option prices do I buy? How can I limit my risk? TheoTRADE has your answers. And we have trade alerts. We build recipes here at TheoTRADE. And what a recipe is, just that, it's a checklist for each strategy and each unique variable you're going to encounter, okay? And we're now taking TheoTRADE a step beyond. Welcome to Ultima Alerts. We built criteria, checklists. It's very similar to, like, if you hopped into the cockpit of a 737, okay? You get into a nice Boeing 737, no pilot just goes, let's go, sit down, and just throttles up and takes off, okay? They go through highly detailed checklists. Why? Okay, there's variables. You want to make sure that everything is right before you take off. And then when you're in flight, okay, if anything happens in flight, they're literally like trained, like, okay, here. That is what our checklists are based on. It's the logic. What if we go up? What if we go down? What if time moves forward? What if volatility explodes? We have the answers to those questions. We'll give you the right probability. How many option contracts for the account size? When do I close the premium sell? What if we sell off big? Do I bail out of a trade? What if dividends are coming? Okay, what if it's triple witching? What if we rally massively? Can I fix a losing position? It's about how, it's about when, it's about why, it's about what price. And I'm telling you, it is just the beginning of the variables you're going to face while selling Ultima options for a living. Look, you can read, okay, on what selling Ultima Premium is. You might even know how to build a few trades. Like, you can Google right now, and I always tell people this, you can Google sell premium, 10,000 pages will come up. But you know what they don't have? Okay, they don't have criteria. They don't tell you the specifics, the exact delta that you need to be at. Not just the delta, you have to know exactly how far out to go in time. Why was I 119 days out selling a 9 delta? Quite frankly, it's actually not that accurate. I should be a little bit lower in the delta, but I'll tell you how far to go out in time, okay? How to layer the positions on, how to know when to sell a call, how to know when to sell a put, what hedge should I have, how many hedges should I have, okay? Again, nothing like that is going to be on Google. And moreover, it's not going to have trade alerts on there either, okay? You need TheoTRADE's alerts, 20 plus years trading experience. That's just me. I have 25 years now in the seat. Access to client order flow for 15 years. We viewed and studied millions of trading accounts, okay? And ran education for 15 years at both thinkorswim and TD Ameritrade. At the time that I was at thinkorswim and TD Ameritrade, it had the largest option order flow in the entire industry, bar none. That's where a lot of this criteria comes from. Ultima Trade Alerts is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We spent years fine-tuning this trade setup, fine-tuning the criteria, and now real-time alerts at the convenience of your mobile device. The Ultima Income Generator Alerts, okay? I am the trader for Ultima, TheoTheta Small and TheoTheta Large portfolios. Okay, these particular portfolios, along with everything that we offer here at TheoTRADE, is $397, okay, for 3 months. Now, bear with me for a second. There's a lot more than just alerts to your phone. And give me a couple of moments to talk about this. Okay, it's $397 for what? For 3 months. We're not just going to stop there. There's a full money back guarantee. I will discuss, okay, the money back guarantee here momentarily. And what I mean, okay, by that is if you are not satisfied, okay, at any point in the next 90 days, just get your money back. It's only $397. We're okay with it. Like, just seriously, get your money back. We want to make sure that, and I always say this, and I want people to really embrace it. We want people that want to be here. We want people that want to learn these strategies. We want people to learn how to execute. I want to show you something before I go any further. Yes, it's $397. That is not, okay, not just some introductory price. Like what happens after 3 months? After 3 months, you can do it again. Okay, do what again? You can sign up again. This is not a membership. It's $397 for 3 months. And we give you trade alerts. Okay, but we also give you education, okay, beyond your wildest dreams. You get access to everything that we do at TheoTRADE for the next 3 months. Before I go any further, just to show you, okay, do people really do these trades and so forth? Okay, let's cruise over here. This is a Theo Theta portfolio. Okay, see this, the Theo small portfolio? It's designed for account sizes at $5,000. By the way, while I'm talking about this, you guys are welcome to go TheoTRADE.com/SKU. S is in Sam, K is in Kick, E is in Echo, W. TheoTRADE.com/SKU. Okay, I'm bringing that up, okay, because I want to make sure that everybody sees it. You are welcome to go there. In fact, I'll even take you over really quick. And I'm going to show you something of critical importance. There's TheoTRADE.com/SKU. Okay, we have a full 90-day money back guarantee. It's $397. Simply click add to cart. Okay, when the cart pops up, make sure to put your phone number in. Why? Because it automatically registers you for the text messages. Okay, it's $397 if you do a single payment. It is more if you actually break it into payments. Okay, that's up to you, but it's a single payment of $397. Okay, and it's a full, again, it's 100% risk-free. Again, we want people that want to be here. If you're not happy in any way, shape, or form, it's okay. I'll still love you. Okay, you don't have to do a little song and dance. You get your money back. When you look at this, like the Theo small portfolio, and there's a Theo large portfolio, people always ask, how many people are doing this? Let's go look at some of the trades. This is part of the Theo small portfolio. Now, there's some trades in here, okay? Let's go over to the trade tab. Let's close everything up. See where these dots are? That's where trades are. So if there's trades on in here, okay, let's go look. There's volume, okay? Let's go look at what's called open interest. Notice anything interesting in here, okay? I want you to see in this product, look at every single strike around us. Open interest, 166, 20, okay, 222. Look at that one. Notice anything interesting about that? That's where my position is. There's 2,000 contracts open, okay? Why is there 2,000 contracts open? Because we traded it, all right? You're curious if other people are doing this. Here's another one. That's a position I have on. The heaviest open interest. We are by far and away, okay, the largest, okay, unequivocally at TheoTRADE, we are the largest alert service, bar none. There is nothing even close to the size that we're doing. This is just one of our portfolios. This is the small portfolio. The big portfolio is huge by huge. Look, there's another one, almost 1,300 contracts. We can show you this again and again and again and again. There's a hedge that I have on in here. Look at the hedge, okay? You can actually see, look at the contract size right here, okay? Right there, that's actually the hedge in there. Everything is very, very transparent that we do. And it's critical that people know that, do other people sign up for this? Okay, right now, we have just shy of 6,000 clientele, okay, that are trading these strategies. Some of them are doing the small portfolio. Some of them are doing the large portfolio. Obviously, the vast majority have moved on to the large portfolio. Look, okay, you do not have to have a minimum of $5,000. You could do the small portfolio with as little as $2,000. The big portfolio right there, that you need 50 grand for, 50 grand or more. There's no cost differential. Look, it's $397, whether you want to follow the small portfolio or the big portfolio, and you can follow both. You can decide to do the trades, not do the trades, but this includes text and push notification. Now, what's important to understand, $397, it doesn't just get you alerts. You get access to everything that we do at TheoTRADE, okay? What is everything? You get access to a live chat room. We trade all day, okay? All day long we trade, okay? There's a full start here menu. You say, I know nothing about options. Good, follow the start here menu. This will take you from absolute novice to the extreme. Okay, here, okay, we have an entire suite of classes. For instance, option strategy classes. You get access to all of this. And I want people to know that you get access to all of this because, as I said, like, catapult trading, Z spreads, here's Ultima, inflection point. Okay, what does a class look like? You want to see what a class looks like? Here, I'm going to click on inflection point. The inflection point, okay, here it is. This is actually a class. And you go into like a full screen, and it's me actually walking you through, okay? And it has a full download trade plan with it. There's a full investing plan over here, inflection point, spreads. Click here to download the slide deck. It's all in here. We even included the Q&A of how to do this, okay? You get access to all of this. And again, there's multiple portfolios in here that you can follow. That's up to you. All of it is $397. Now, the Ultima income generator alerts. I am the trader for that and the instructor. Okay, it's Ultima. It's exactly what we're showing you today. No holds barred trading approach. You can see everything. There's full disclosure on all trades, opening, closing, hedging. You get to watch me discuss positions like never before. And again, we also have the TheoTRADE small. In addition to this, this is the biggest differentiating factor. You ready? We have a beginner's guide to Ultima Trades mastermind. Excuse me. Starting Monday. That's this coming Monday, September 25th. Okay. The next mastermind starts. What is a mastermind? It is Brandon Chapman, okay, who worked with us at both thinkorswim and TD Ameritrade. He belongs to you for 6 weeks. Okay, it's about 90-minute sessions. Okay, for 6 weeks, it's full guiding you through how to get started in Ultima. Full Q&A, him actually kind of massaging you through the basics to the extreme, getting you comfortable with inventory management. This is the biggest change. We actually just started adding this. If you went and signed up for a mastermind like this, okay, this would be $1,000 by itself. We're just including it. Okay, it's part of the $397, and there's still a money back guarantee, and you still have 90 days to decide if it's for you. And the reason we do this, okay, we want to get you ramped up and selling premium immediately. Okay, it's like, look, even if you're experienced, I am telling you, show up for this. Okay, you get to talk to him literally like one-to-one over Zoom. Sometimes people get intimidated by questions. It's a very, very small supportive community. You get to be part of like this like-minded, you get to talk to other clientele. But in this mastermind, you get to direct questions on the spot, put Brandon on the spot, okay? Focuses on building skills and confidence to turn you into a much more proficient Ultima trader. It answers any of those questions, any of the doubts you have about Ultima trades. We just found that people that go through a mastermind like this, okay, it's critical. By the way, can we ask questions for Steph? Okay, we may have in these strategies classes. Absolutely. Okay, anything you guys have in questions, okay, this session takes you through, and it's one of the reasons it's 6 weeks, okay, is he'll actually walk you through a progression, and he will walk you into trades, meaning like, the first week you come, you learn a little bit about it. By second week, you're trading, okay, third, fourth, fifth, sixth week, he's actually helping you manage the trades and understand them, okay. This is now part, and I want to make clear, that's part of the $397. Why do we do it? Okay, because look, we don't want, and I'm being honest, we don't want you to be a client for 3 months. There's a reason there's about 6,000 clientele here. And the reason is, okay, we continually, okay, push the envelope. We continually provide trade alerts and the education and support that you're going to need for success. The only way that we keep clientele here at TheoTRADE is your success. And that's how we've actually built this now to just about 6,000 clientele. Look, on all of this, and again, this kicks off this mastermind. That's why, one of the reasons we're doing a presentation today on Friday here, this thing kicks off September 25th. I recognize some people are like, I can't switch around my schedule that quick. Look, it is recorded. Every one of these sessions is recorded. If you cannot make the sessions live, you can listen to the recording and email him off of that. Okay. Do not hesitate to email. We will give you it's support@theotrade.com. Any questions? You also have proprietary access to email on here. Look, TheoTRADE is also a riskless trade, 90-day money-back guarantee. The reason I'm throwing this up here, because I've already talked about it ad nauseum, right? The reason I'm throwing it up here, just go to support@theotrade.com and receive a full refund. Money-back guarantee, the stipulations, there are none. Look, okay, I make it very, very clear. The whole thing is $397, okay? At any point, if you're not happy, please, look, we'll still love you, get your $397 back. It's only $397. It's not like a, critical amount of money. And by the way, after the original 90 days, okay, then the price actually drops to $297. So you go, holy crap, that's unbelievable, okay? Look, there's no excuses, no questions, no commentary needed. If at any point in that 90 days that you're not comfortable, you're not doing the trades, look, sometimes life gets in the way, we get it, just email us, get your money back, okay? There's no stipulations. The Ultima alert, any mobile device, okay, that's considered a smartphone, either Android or iOS will work. We have a mobile application for both Android and iOS. But if you are not comfortable downloading mobile applications, it's fine. We do text messaging. The reason I mentioned the mobile app, we have somebody that's joining us from Hong Kong. You probably can't get text messages from a US number in Hong Kong. So what do? Okay. We'll just do push notification. We can get you anywhere in the world. We have tons of clients in Singapore, Australia, Hong Kong, a ton of clients over in Europe right now. So any mobile device. Okay, this is what the portfolio looks like. In fact, I think I was just showing you that moments ago. Going to TheoTRADE. This is TheoTRADE. Anyway, going to here, these are the portfolios. So the portfolio, you can even, what's cool about this, you can actually copy the trade itself. Okay, copy the trade, and then you can paste the trade into some of the trading applications. Okay. Yeah, if you're in Hong Kong, you can definitely use, that's why we built it's kind of cool, it disappears. We built push notification because we realized not everybody can get text messages. And you know what? Funny enough, the push notification, okay, I argue works even better than text messaging. It's fast because it pushes to everybody at the exact same time. Again, I want to bring up one other point on here too, okay? When you're part of TheoTRADE, you get access to everything that we do at TheoTRADE. TheoTRADE's not just about like Ultima alerts. We even have a new class, okay? The new class is coming up next week, September 26th. So not only do we have something going on the 25th, which is your mentorship, we have a brand new class coming the 26th, okay? That's me and Corey Rosenblum. Now this is day trading, unlocking edge in your day trading with Don Kaufman and Corey Rosenblum, okay? Again, Tuesday, September 26th, 10 a.m. to 1 p.m. I'm going to actually do about an hour and a half of that. Corey's going to do the other hour and a half. I think you guys will love it. Again, it's recorded, all right? You get access to all of that. But again, one of the things you got to understand about TheoTRADE is, and I put it up here again, it's theotrade.com/SKU, okay? We're live 6.5 hours a day. Hopefully this refreshes. There it goes, okay? We're live 6.5 hours a day. Look what he's looking at right now. It's expected moves, okay? Those are expected moves in the Nasdaq. So what's actually kind of cool about this here, I'll even turn the volume on.
Rotations. This was a deep rotation.
All right, that's Tony Rago. He's an intraday trader. You get access to this. Most services, they'll charge you $500 for this or $500 for this, and we just give you access to everything. Look, the only way, okay, the only way that TheoTRADE is successful is your success in this business. I always stress that to people. Is the most important thing to us is not just let's get them to sign up. It's $397. It's longevity. Okay. We want you to be here with us. Yeah. You can fire questions at us. By the way, you can email us at any time. Here, 2022 Ultima portfolio returns on a $50,000 account, 56.6%. We also do weekly update videos. These videos come out every Friday morning. In fact, I'm going to record these videos right after we're done with this, okay? These are update videos in 12 minutes, one of the most critical things, okay? What happens if you get an alert and you miss the alert and you're just like, oh man, I missed the alert. Okay. 12-minute video comes out on Friday and actually shows you why I did it, how I did it, the prices I did it. And if you miss something, it'll help you actually kind of recover, fix the portfolio. If you can't, email us. Email us. Well, I'll give you a one-to-one response in the email. But every week, we give you a 12-minute video of exactly what I did that particular week. By the way, speaking of text messages, this is what they look like. This text message comes from just about a month ago. It's August 17th. And you look at it, you go, oh, a little complex. Part 1 and part 2. This is as wild as it gets. Here's the trade, okay? Or I should say, here's the hedge and here's the trade. Okay, part 1, we're laying on a hedge. Part 2, we're putting on a trade. Okay, look, strategy, Ultima, inflection point, Theo Theta, small portfolio, Theo Theta, small portfolio. There's part 1 and part 2. Okay, most of the texts look like this. What is this? This is a closing order. Buying back 47.50 call for 10.25. When was that? Friday, September 15th. Now we're getting more recent. Hold on. I'm just, by the way, I threw this one in here so you guys could just see a trade like an opening order. Okay. But this is very recent. This is Friday, September 15th. This is exactly a week ago. Then this was from Tuesday. What Tuesday? This past Tuesday. What did I do? Closed for 50% profit. It bought back the 4,900 calls. Where were the 4,900 calls placed? Okay. When were they replaced? They were right there. Okay. Here's the 4,900 calls. They were opened on August 17th. Okay. Ironically, when were they closed? When were they closed? Okay. This past Tuesday, which was exactly about a month for a 50% profit. Continuing on, this is yesterday. What did I do yesterday? Yesterday, I actually put on some positions. Yesterday, I started firing both a call and a put. Look at that, almost a $32 credit, okay? And we had a hedge from an existing and previous Ultima trade, okay? That's what you gotta learn here. This is what you guys wanna learn, right? This is something I just copy and pasted earlier, okay? I don't wanna put any names in here. Personal situation, live in Australia, current TheoTRADE member, okay? Went through that exact class we were just talking about. Tells you the trading account, Ultima class, okay? Growing account from 18,000 US to 31,000 US in 12 months. Now this is an Aussie. And I wanted to throw that over here, and he's starting to step up into the bigger account size. Okay. So I wanted to show something real, something tangible. That email came in yesterday. All right. What I remember saying, this came from Kirk. Consistent, valuable education that is supported on an ongoing basis for us users. Okay. Long-term with very successful results. Okay. Again, moving on over here, Paul M, the education is second to none. And if you're a novice when it comes to markets and trading, the training material is superb, professional, organized, written in plain English. The professionals at TheoTRADE have all the content, okay, to get you to whatever level you want to take your trading, investing education to, and skill. Being a member for 3 years, okay, I'm still growing and learning, really enjoying the experience, okay. Last one, this comes from Jeffrey. I want to thank you for all the different staff point of views. This year, I did more of what works and less of what didn't. Okay. Thanks to your selling premium, I took $12,000 to over $32,000 in 18 months. Okay. Been doing your method. Thanks again so much. Look forward to your new ideas in the coming year. Look, get into TheoTRADE now. Okay. There are 30 riskless spots. Now that is, okay, very cleanly to try to, again, incentivize you to enroll. Obviously today, we give you 30 riskless spots. That's 30 riskless spots of this $397 riskless offer, because we've never done this before. With you're getting the Ultima income generator alerts, but you're also getting access to Brandon Chapman's money back, guarantee mastermind. And the one thing that, I'm pretty adamant about, you realize in 6 weeks, you get to go through the full mastermind. The mastermind kicks off on Monday. You get to go through the full mastermind, and you still have the capacity even thereafter to get your money back. Again, we want it to be completely, totally like risk-free. So again, it's $397. There are 30 spots on the riskless deal. And as I said, we do that to incentivize people to enroll for that and enroll for it now, because there's nothing better than 90 days, you get everything that's included here. But, moreover, the mastermind kicks off on Monday anyway. Look, text messages coming from a 602 number. Okay. We also have Canadian text messaging at a 647 number. Again, go to TheoTRADE.com/SKU. I want to reiterate one point on here. Not only are you getting the mastermind, but again, there's a class coming, and this will also, of course, be emailed out to all members in here. Okay. Somebody said, should I set up a brokerage account before trading, signing up for TheoTRADE? Yeah, we'll actually guide you to that. We have some really great deals with different brokerage firms. In fact, okay, more than any other firm here at TheoTRADE, I'll just throw this guys out. I'll throw this out here right now. Here at TheoTRADE, we have a number of resources to you. Okay, different brokerage firms that we are presently working with. And I'm watching markets out of the corner of my eye over here. Different brokerage firms that we actually have relationships with. Okay, we also have a relationship with the Chicago Mercantile Exchange. So think about how many education firms might be out there. Okay, we're partnered with the Chicago Mercantile Exchange on. They actually listen to us about building new products and so forth. It's a great relationship. Anyway, we'll help you, Steve, get set up with a brokerage account. And it's a great deal for us and great deal for you. We predominantly use, as you can tell, TastyTrade and the thinkorswim platform, but it's a great deal because everybody basically is on, like one of two platforms. And if, by the way, if you're out of the country and on like, IB or something, it's totally fine. It's totally fine. Pick your own brokerage firm. That's fine. It just on a day-to-day basis, I'm usually trading and using one of two platforms. And I just let people know right off the bat, it's Tasty, it's thinkorswim, and it makes it easier for all of us to know. By the way, Tasty and thinkorswim are very, very similar platforms built by the same people. Anyway, TheoTRADE.com/SKU. As I was saying a moment ago, I wanted to pull this up over here. Okay. When you're actually enrolling for this, make sure to put your phone number in because your phone number immediately gets you text messaging. Okay. And I think that that's fairly important over there. By the way, down the list over here, again, it's $397, one payment of $397, and that's for 3 months. Okay. Onward over here. One of our members is saying, been a subscriber for about 4 years. This is the only organization that has actually taught me how to consistently make money in the markets. Comes in June 12th, 2023. Now, I'm going to answer a couple of general questions, then some specific questions for you. As I am actually saying this, again, those of you, if you're enrolling, again, it's TheoTRADE.com/SKU. Again, back on that page, as you are enrolling, okay? On the bottom of this page is actually where the auto expected move indicator. For those of you that have enrolled, don't worry about it. We have that indicator built into the TheoTRADE site. Okay. I'm going to answer again a couple of questions for you guys here along the way. And I want to make sure that everybody gets every question answered. We've got Todd Sweet, Brian Aponte, Jeff, all answering questions right now, including me. In the room. Feel free to ask questions as we're going along over here, and we will try to do our level best to get those answered. By the way, it takes me, just so you guys know, it takes me anywhere from about 3 to 5 minutes before I actually see you enroll in here. Okay, and then we'll of course send out an email to you, username, password, everything. Look, what do you need to really get started? Okay, you need a laptop and you need an internet connection. Okay, at this point though, you don't even need a laptop. So any mobile device, and you can basically do everything out there. Okay, and I stress to you guys now, iPads and so forth, it's fine. You don't have to go out and buy some expensive piece of technology to do this. Execute off your phone. Okay, I do a lot. I execute off my phone a lot these days. So it's fine. We have everything that you're going to need to get started. Okay. The second thing, this is not a membership. We're not going to auto renew or bill you again. So look, when you sign up for it, okay, when you sign up for this, it's $397. If you want to do it again after that, okay, then it's $297 for the next 3 months. Okay, why do we do that? Because onboarding you is incredibly expensive venture. Okay. Oh, Irene was saying, how many trades do you do in an average month? Okay. It depends on the portfolio. I try to average, you know, let's say on the TheoTheta small portfolio, okay, put me on the spot over here. What happens in the portfolio is it may be quiet for like 2 weeks and you get a flurry of 4 or 5 trades. I'd say generally speaking, okay, it's about 2 trades a week on average. Maybe some weeks when it gets volatile, like right now, you might be as much as like 3 trades in a given week. But okay, I want you guys to understand that it could be totally quiet for 2 to 3 weeks because nothing goes on in the market and all of a sudden flurry of trades. Okay. All right. Another follow-up on that one. So you don't have to trade futures. We prefer in many cases to trade options and futures. It's exactly like regular options because it's better for margin. If you have a lot of money, it doesn't make a difference, but it's better for margin in a small account to use options and futures. It's a different margining system. All right, so we don't auto renew. We don't ever auto bill again. That's so important to us. Okay, we provide you weekly video updates in 12 minutes. We do everything, take you through everything that happened. Okay, number 4 in here, we give you access, of course, to TheoTRADE Mobile. And TheoTRADE Mobile, you get to receive push notifications. Okay. In addition to that, you can see all of the archives. And when I say archives, okay, anything that we're doing, right, at TheoTRADE is archived. Every word spoken on TheoTRADE, okay, is archived. And it's when I say every word spoken on here, like I literally mean every single word spoken on TheoTRADE would be archived. Those archives, I'm actually going to show you right now. Those archives can be accessed right on the mobile application, and you could just listen to any archive. So when I say like, you know, there's 6.5 hours of you know, discussions a day. By the way, I am on every single day. I don't just show up and do a little dance, make a little love, get down tonight. I am on at minimum an hour a day, and I usually like to kick off the trading sessions. I wake up early, I get caffeinated, I go for it. Okay. And then I sit here and trade throughout the course of the day. And when I do trades, it obviously shoots you guys text messages. It's is good stuff, eh? So the mobile application does so much more than just push notifications. But again, know that you download TheoTRADE Mobile, add your cell phone number, receive text alerts. Okay. You can email us. Number 6 over here is really critical. Okay. You can email us at any time and receive a response within 24 hours. Okay. Including trade related questions. I'm just throwing something out to you right now because all too often people go, can I email you like, you know, a trade related question? That's what we're here for. Okay. So the trade related questions, look, most of us held every brokerage license imaginable. All right. We know exactly how to answer questions. You know, you're not going to put us on the spot. You don't have to say my dog's roommate's cousin had a hypothetical question. People, got a trade related question, and we'll answer it for you. Okay. So email us anytime. We'll get back to you. By the way, the reason we throw 24 hours in here, don't email us on a Friday afternoon with 5 minutes to go to the close. We trade. Okay. We trade. So you got to give us like, you know, I answer emails in the late afternoon when I'm here in Arizona. When I'm in the Virgin Islands, I answer them early in the morning. Okay. Couple of names that are coming up. I'll just read. Okay. We have 30 riskless spots. And it takes, again, as I said, it's about 5 minutes before I actually see your name in here. But these are individuals that have enrolled. Okay. And I presently see your enrollment. Raymond J from California, Joe M from Georgia. Okay. I don't want to, is it Jacques B from California? I'm butchering that. Okay. Meredith G from Florida. Just a couple of names that I'm reading off. These are individuals I can see that your name has actually come through, that you're enrolled, that you're confirmed in there. Okay. Hopefully I did not butcher, okay, any names in here. Anyway, variations of any of the trades we do. Literally variations of any trade we do can be done now in an IRA retirement account with this little, okay, as it's $5,000 in a retirement account, but $2,000 in a regular margin account, okay, and you can do that, right? Okay, I'm gonna butcher this next name too. Oh, you're torturing me, okay, torturing me. Rackhuffness, A from Georgia. I'm sorry. It's okay. You know what? We're going to come up with acronyms like they use on the trading floor, where everybody has an acronym. And I was DAC, DAK, but we'll call this one RAQ. Okay. So rack. I like it. I like it. Anyway, with that, retirement accounts, totally plausible. We can help you get approved, okay, for options at several major broker dealers. If you have questions about broker dealers, okay, not a problem. Somebody was saying, do you do anything with crypto? We actually do have instructors that are heavily, heavily involved in the crypto side, and they will absolutely talk about it. Formally speaking, okay, the volume is very, very low in crypto these days, very low, and it has not made for tangible tradable markets. So the instructors, they'll explain significantly more about that those markets are incredibly dangerous, okay? Remember, there's 30 riskless spots available. Get results, take action, enroll for TheoTRADE now. If there are questions, okay, concerns, anything, okay, we're here to answer those. Again, everything that we do on the screen is pretty much no holds barred. Look at this, the S&P is up 25, now down, okay? The sell-off has commenced. So the beatings will continue until morale improves. Again, please follow us over to TheoTRADE.com. Again, TheoTRADE.com/SKU. You can enroll. I'm going to be here for a few more minutes to answer a couple of more questions in there. Okay. If there are any more, by all means, we'll be in here with you. Okay. Oh, somebody said, yeah, the name of the TheoTRADE map. It's just TheoTRADE Mobile is the name of the TheoTRADE app. Okay, and you'll be able to find that. If you ever need to get a hold of me specifically after today, go to support@theotrade.com. Support@theotrade.com. So we use a general inbox to make sure that your email gets to where it's supposed to go to. But if you want to get a hold of me directly, go to support@theotrade.com, put Don Kaufman, okay, or just Don in the subject line, goes directly to me. JH from Kansas. Okay, Jay, that was much easier. Okay, that was much easier. Anyway, with that, I want to thank everybody for tuning in today. Okay, I will see each and every one of you. Look, I'll be live on Monday morning, of course, at TheoTRADE. Brandon Chapman will be with you guys. Brandon Chapman actually kicks off that mastermind, of course, on Monday. On Tuesday, we've actually got a class here. John B. from Tennessee. Okay, just reading off the last couple of names that are coming in over here. Go to TheoTRADE.com/SKU, enroll now. Thanks, everybody, for tuning in. Be here for a few more minutes to answer some questions. Bye-bye.